FXBros.
What's up, y'all? We back for another Sunday live. I'll break down these markets. Australian dollar currently, we are overall from last week. If we look at Thursday, we've been in a selling trend. It looks like the market has pulled back for possible, if you want to continue for sales, but if you go to the higher time frame, start off at the 4 hour, we're starting to get bullishness. We did get a gap open. If you look at this first Sunday, we got a gap open on the market. Turn it down. Keep going in. Yeah, you see the market gapped open. We didn't get no bullish engulfing besides this little sandwich scenario. You got a bullish situation here, and the market did advance higher. This was the gap up right here. As you see, the market traded back down into it. Then we continue higher, and currently this is the most important candle right here. This is the candle that broke out of both of these highs. So you have a high here on this wick that got rejected on the gap open, and you got this double top scenario right here on Friday's close, and Sunday at Friday's close at 5 or the 4 o'clock candle, and then Sunday at this 6 o'clock candle. We got double highs, which was broken here. As you can see, the market was broken here, and we were looking for a pullback to 65.88, and it looks like we got that. Let me see what minute that came at. Oh, that came right here. Yeah. So that was the move right there. That's what we was waiting on. So we were looking at the 15-minute as a pullback for the bullish continuation. Now, if we see like this level, these double highs, or this open and close, this resistance level, we see that get broken, then this all is true. This bullish play is true. If you got in, good. If not, you might still have an opportunity. I would say at the close of this candle, 15-minute, we get a bullish engulfing. It might be an entry. An expectation with the higher time frames can hold. Like I said, we're not getting a bullish engulfing on this move, so I would say it's going to be short-lived. The question is how high we can go. If you were, I would probably be focused on the recent high as a TP, because this is probably going to be too high on a Sunday. So I would look to be taking probably at max, even if you caught the bottom. This is like a 10-pip move. Like, just be okay with that, or at least take off 75–80% of the trade if possible. Other than that, the next targets will be around 66.05 or 66 flat, which is pretty close to this high. So you could even wait for 66 flat. So I would say for a better situation as far as for the engulfing move, we're probably going to get some kind of pullback for bears, and we may respect this 65.70 low, and you may see a setup of bullish engulfing right here. That may be like the worst that can happen for this move right now. Other than that, if we break through the 65.70 and continue with with volume, then we possibly could fill this wick on the 1 hour and continue down to a lower low from Wednesday, 06, 05, Tuesday's low, Wednesday's low, around 65.15. And that's on the 1 hour. Let's go to the 4 hour and see. Basically, since the bulk of the drop that we've been experiencing for the long term, now that we're on the 4 hour, we can look at this. What we know last week, this sell-off was pre-election news, and then after the election, we started to buy up for a better position from what we did. This seems like so the market sold off, and they wanted more of that. So the best way to take more of that is to get people, also entice people into buys by running stops. And yeah, people were probably trying to short this. People were probably trying to short this right here because they missed out on this move. So they're like, okay, bet we come up to here, I'm gonna short it again. And that didn't work out. So they lost here. People who had stops lost here. And people who were buying this thinking it was gonna go through the roof lost. Because you know everybody has stops below this wick, probably stops right up in this area, and all that got ate up. So right now we did breach the change of direction by breaking this high right here on this 4 hour candle. But as you can see, all that got ate back up, and we're pretty much back into the prices we were at before the election. So if you just cancel all this out, pretty much the run up that led into this sell off, because the market could have sold off in here. We're pretty much back in this same price area. Like if you look at the price of 65.91, we were playing around that area at the end of October, on the 28th. Then we had highs. That was like the resistance area where we at right now. So if you want to look at it, this could be like a breakout pullback type situation, even though we had a more fair scenario right here. But as you can see, the breakout that happened for this structure failed at this structure, which is more important because we got a true double bottom support broken through with damn that double top resistance. So this is strong. So the fact that we didn't break it, that was a failed bullish push. And we also know why this bullish push was had, so they can sell into it for the election. So if we knew that this was a break and retest, before we knew the election was going to happen, even though everybody was expecting the dollar to go up somewhat and the stock market to go up, ultimately, I think the dollar is going to have some lows to break through potentially, especially if we continue to cut rates. It's a potential that the dollar could fail. Not saying it is. It is a slight potential. So we have to look at that. If that happens, what would that look like for the Australian dollar? That would mean we would get a bullish Australian dollar. So if that starts to play out, this scenario would have been true. And this was just all manipulation to fake people out of that move, to get people out of that mind frame of that the dollar is dropping, AU is going up. So that being said, is this move that we're currently seeing another retest? Because if you look at this wasn't a retest, but this show was a grab of liquidity. All the people that were sitting here happy when the market was going bullish, everybody had stops here, stops here, stops here. All that got ran through. So they out the picture. Probably changed their bias too, because they was in euphoria when it was going up. So now that they out the picture, the market ran up again, giving these people who missed out on the election sales a chance to get in. They start to get run out because they had stops above here. They get ran out. So they flip their bias. Oh, we going bullish. Bam. We run up. This is probably tying into the people who feel that if we are going bullish, the dollar is going to fall. Interest rates, all that yada yada. They happy. Euphoria. Then the market starts turning around. Then everybody changed like, oh, this is the rest of the election news. The Australian dollar's going to fall. This is the move they wanted to add into, and the dollar is falling. So get into your sales. A lot of people caught sales. It was a 4 hour engulfing, I think a 1 hour engulfing too. Bearish. So if you caught that sell, nice. You could look at it as a missed opportunity for the election. I mean, it was a bigger move. It wasn't as fast, but it was a bigger move. Um, with that being said, the question is this now? We erase all this election shit, is this move now the move we've been waiting for since this consolidation been in play? We've been in this 4-hour consolidation pretty much since October 28th all the way to November 1st. Not a lot of time, but pretty much a whole week. A week worth of consolidation. Then we got a breakout, retest back into it, but not only retesting, faking people out to the sale, bouncing back up through, struggling in consolidation a little bit, then a breakout, euphoria, breaking out ultimate structure here, and ultimately looking for sales. It sold off in that area. Now, as we can see now, the market is starting to trend higher. But one thing I like to point out too, even though we don't get our bullish engulfing that we look for, I look for highs being broken on the higher time frame and also structure on the lower time frame as a sign that this may be a market that may leave without you, without giving you your bullish engulfing. Like you can find other scenarios to get into the market, looking at the fundamentals, looking at the bigger picture, looking at how people were manipulated into positions, and you can see what potentially is the true market flow. Because if we were in sales, to keep it real, if we were primarily in sales, even though this is a bearish market, but if we were continuing in sales, why didn't this election news continue the market lower? What was pulling it up high? Was it a dollar falling? Was it the bond market? Was it stock market? Every story has a tail, and if you can read into it, you can come out on the right side of the market. So I always look at that scenario like, what would have caused this market to keep going down? Why didn't it fall? Well, one thing is a weak dollar. A weak dollar would have continued pushing this market higher. So as soon as the market started to fall from pre-election, and then the news came out about the new president, which was pretty much around here, around market open, we got some indecision, but overall the market started going higher. That would mean a fall in the dollar. What would also cause a fall in the dollar besides interest rates? Well, you got to think the stock market was running up. S&P, NASDAQ, Dow Jones, always making new highs. And I think gold was falling. So if you want to look at it like that, you got to put a different hat on and realize like, okay, we are going into a market where the dollar is being pulled out, gold is being pulled out and poured into crypto in the stock market. So one could say this is the reason why we had that up move, falling dollar being pushed into other assets. Then again, when the AU fell, that means the dollar was going bullish. So we had more of that kind of story leaning to more towards, the dollar going bullish, strengthening the economy. Everybody liked the new president. So that's the story for that. But overall, and I'm probably, it'll show probably on the dead a little bit better, we might be seeing somewhat of a current range still, even though it's hard to see it because we did kind of break out of this minor range. But as you can see, we really didn't do too much, even though the market broke out to the highs, broke out to the lows, then broke out to extreme highs past 66.50. We kind of still been in the thick of things since really October 22nd. The highs of October 22nd and the lows of October 30th. Like we've been in that range. It's a big ass range. There were trends within that range, mostly bearish. But now that we start to talk bullishness after all these structure points have been broken. One thing is true. We have more bullish structure points broken than the bearish ones. Like I said, if the market was bearish, would have truly been going down. And how would that look for the dollar? The market was tanking. That means the dollar should be shooting through the roof. But like I said, what was causing the dollar not to do that? Which would cause the AU not to break new lows. And that would be the dollar must be failing in some other fashion. If it's not gaining with just the fact of interest rates of the economy, then it's failing because people pulling dollars out and going into more and pulling money out of bonds and shit to put into more riskier assets like stock market and crypto. So it's just the flow of money. You just got to follow it with the candlesticks and the time of day and week and month that we are in the current market, especially with news coming out and shit. Let's see. So let's go to the daily right quick. Go to the daily. And as you can see, the daily is looking kind of weird. I can't say range, but it's not trending so well. It's making weird ass pullbacks. Like, we've been in a bearish market since the beginning of October, been selling off all the way until the end of October, and now that we're in November, we're starting to see play. And then even look at the candles on these gaps. We saw the end of on this Friday, we had a bearish day. Market opened up with a gap, a bearish day, and then we get a green candle, a bullish candle on the day, followed by bearish, then bullish, then bearish. And if you look at it, these bodies are not as weak as they seem, because you get a far enough bullish push and then that bearish ate all that up. Then you get a further extension out on the daily, then the bearish kind of ate all that up. You notice how they did on here, which also required them to sweep the lows. They kind of ate it up here. Swept these lows, but didn't attack this area. Nor did it close below here or this true structure of the bodies down here at around 65, 59, 65, 60, just to be safe. So with that being said, it's kind of on a larger time frame. It's pointing that we could see some movement up, but with the fact that the bears are fighting it, it's still up in the air. I mean, the bears did their job on the 6th, the Wednesday on the 6th. You know, that was a lot of work put into the market, roughly, like I said, primarily off of election news. And now that that's passed, we're starting to see a lot of volume in the markets, a lot of volatility of days that this currency pair doesn't normally do, especially in a consolidated time like this. We got 4 days of extreme volume on these daily candles. That doesn't usually happen. Like, you know, you may get one here, you may get one here, you may get 2 back to back, followed by another one. But you see, when the extremes happen, they kind of always follow by another extreme to the downside. So you be looking on it, and it kind of always happens around the same area. The flip of it, you know, get a bullish push, get the bearish push. Get the bullish push, we get the bearish push. Get the bearish push, we get the bullish push. So you kind of see those candlesticks kind of happening around, similar to the same, around the same price area. Doesn't necessarily always happen like that, but you see what I'm talking about with volume. When the market has an easy flow through with no fight, on the flip side, it'll have an easy flow through with no fight. And that's how you would kind of look at the daily markets, if anything. I wouldn't really utilize that on a smaller time frame. 65.88. We're there again. We're gonna see how we gonna handle this area. Nothing's being manipulated on right now. For a while, where we did make a high, this one is struggling to break a high, but it's also like in its body. It's kind of hanging around the body. Might be giving people multiple options to get into this 65.88 area. I'm not sure. We'll see. Looks like we may be getting a bearish engulfing if we close below. I'm not sure with this indecision kind of pin bar candle. Kind of iffy. I'll go down to the 30-minute. Guess kind of some engulfing situations going on. Like a little sandwich, but nothing too strong. 65.86 is a possibility too. I mean, we could trade all the way down to this low. You know what I'm saying? It's not a possibility because we already did attack the highs during Asia on the 30-minute. Maybe we could be kind of making a double bottom on the lows down here, 65.82. So even 65.86 is not bad. If you get in at that price, don't be scared of a 4 to 6 pip, a 4 to 8 pip stop loss instantly. Don't be scared of that if the market continues to move down. Now, if it breaks this low, 65.78, then it's a possibility, a stronger possibility that we might be attacking 65.60. So I would be out of that, you know. But this is like a good middle ground if you can catch 65.86. Be a little bit more patient to see if the market holds this, and we might get a pullback to the upside. As you can see on the 30-minute, we are kind of building into structure somewhat, especially after we swept Wednesday's low, which was the pre-move to the sellout. That would be Thursday pre-election. I believe what was this? Yeah, that was Tuesday. That was Tuesday going into Wednesday, so the 5th onto the 6th. Okay. Yeah. So that was the election news, and Asian got pretty much what London, New York did after we found out who was the new president. We swept that on Friday, closed off here, and now we're coming back. Yeah, I'm betting that we might not break this 65.78, 65.80, 65.78. From what this did, this swept the low of the presidential news, and well, swept what the Asian session got from the presidential news. Because you see, London, New York was playing all in it, just tricking people out of moves, Finally, late in the day, we get the Asian session taking all that information and continuing on, giving people with enough move up to the upside to sell into this low again. And ultimately on Friday, we didn't stop nowhere but right below what the Asian did. That great price they got. So now they got a great price. And right now, it's doing a pullback. On the bullish side, this could be a good area where we could look to add for buys. Like I said, it could come all the way down to 65.78. But right here, with don't be scared of, like I said, a 4 to 8 pip stop loss. Or drawdown, not a stop loss, but drawdown. Don't be scared of that if you add buys right here. I'm going to hold out a little bit longer, but this is not a bad, because if I hold out, I may miss out. But the only reason I'm gonna hold out because I already got interest right here. So we're gonna see. But this is a breaking, it's like structure break in the retest. But we're gonna see how well it holds here. Yeah. Whoa.
What's up, brother?
It's popping, man.
Man, chilling.
What kind of hat you got?
Huh?
Oh, that's fire.
Yeah, man. Got puff embroidery.
Oh, that's the puff?
Yeah, man.
Oh, okay.
I was testing out some new things.
Nice.
Man.
As you can see, if anybody caught in buys, you can see how the market is moving against you heavy. Don't be worried. It's just trying to scare you out of your position. But the main thing we want to be worried about is if we're going to hold 65.78 if we get that low. If we get that low.
Okay.
We do have 2 minutes left on this 30-minute candle. Yes, sir.
I kind of like these quick little buys as well.
So these quick little buys.
Yeah, I like those.
Yeah, same here. I'm in them right now. I caught that breakout right around here, around 7:15 on buys. Pretty much right around my entry, but like I said, I'm looking at if you're looking at the 15-minute as low as that, this structure right here, right around 5:45. I don't want it to break that. That's what I'm looking at, going for long positions. So all this movement down, if I believe heavy, which I can't say heavy I believe in it, but looking at structure from the previous weeks and what manipulation happened with the election, I do believe we are possibly going bullish. You know, of course, we're going to have to couple that with the dollar, see what the dollar looking like, how much strength we got on that. Yeah, I would be rolling the dice on adding buys all the way down. And as far as it want to go, I'll be adding buys. But what I don't want to see is probably not on this time frame. This wouldn't really scare me. Probably more on a 30-minute, if anything. In an hour, even more. But I don't want to see it close below here. And really, it'd be the hour, to be honest, because the 30-minute could throw you out too. I would say the hour overall. But if you want to catch interest to see when that prime time is, you know, like on this move, we had the Asian session start here, giving us a low right here at 65.82, and currently we are 3 pips away from there. I wouldn't see no reason for the market creating a new low, possibly sweeping this structure. Like I said, I just don't want to close below here, and this is the 5-minute too, so you know, like I said, you can get closes all down here on the 5-minute all day, but I just want to see structure. Even if we sweep this, I want to see structure continue to build up. Also, keeping in mind, this is Sunday, so I know this is not the most heaviest volume day. This is just a lot of excitement for people that's hungry for this high of the market. Soon as the market's open, everybody looking to see what they can do. See what kind of interest they could get in for the week. So that's pretty much the volume we're getting right now. Would you say that's kind of true? Like the Sunday volume is just people who can't wait for the week to kind of build itself up?
Yeah, I mean, the Sunday Sunday and Fridays, they tend to like run, if you will. You know what I'm saying?
Mm-hmm.
Uh, but yeah, they are very unpredictable. Let me say that.
Right.
Yeah. But I actually like them. I actually like them. Sometimes on Sundays and Mondays. I mean Fridays. I meant
You said cry days?
fry.
Oh boy, that sounds fire though. If you just coin that term, cry days, because
Well, that's the fact. Yeah, there you can. Yeah, go ahead and coin it.
cry days. They
For real, because it be like that. They give all them fucking games back.
cry days. That's the day.
I'm gonna tell you what, my biggest losses be on Fridays.
And then we just coined it right
Yeah.
here on live. Fridays are the damn. Look at that bullish push out of that zone. But cry days are days. Fridays are only a day when you had a pretty bad week and you trying to make most of it back on Friday. Then you turn that whole day into a cry day. It's not Friday no more.
Yep.
It's a cry day.
Or you did so well in a week, you hit a milestone, so you try to ride it and hit another, like just make another milestone within the week.
There.
And then ride that one out, and then end up taking all that stuff back. Take away the new milestone you built and the first one.
Cry day.
Cry day.
Here we go. Yeah, man. Well, yeah. What you looking like, man? I know you in buys on AU. Anything else?
No.
Okay.
Oh, I went in. Went in with a clean slate, man. I had a really good. Had the best week ever,
Nice.
and so I closed everything.
Nice.
Closed everything. I was like, all right, fuck it, that's it. So, yeah, these buys are trying to get to that 50% of the body of Friday's bearish candle. Um, Probably like a good 20 to 40 pip move out of this buy.
We're gonna get out.
Yeah, ultimately, I'm looking for sales though, like for this week. Looking to get into some sales.
Gotcha.
We shall see how that plays out, but yeah.
So you talk
like for this week, I'm looking to buy, get some good ride some buys early, and then get into a sale and ride it out.
So you say you're looking at the 50% of the Friday range.
Yeah, that body.
So we go put on the fibs. I got the 5 minute up. Currently, that 5 minute range shows a 50% level of 6607. So in other words, that would be like a target for you for this move.
6607.
Yep.
That's the middle of the daily candle of Friday.
Yep. November 8th. No, you're right. Because Friday starts on Thursday. You're right. You're right. So we need to go to the New York high of Thursday to the New York low of Friday. And that will give me a 50% level of 6623.
There you go. That makes more sense. Yeah, that's what I said. Take probably like around 20 to 30 pips from where it's at right now.
Yep.
Yeah, man. Real simple. Once I start taking some profits and looking for some some signs of reversals to follow that bearish movement, then yeah, I'm gonna get in that.
That's a good ass area. That's that powerful. I don't know that 6620 been heavy these past 2 weeks. Been a
Yeah,
area. Good buys from that area and good sales from that area. Even before then, but still in all, that's a good little mid range, especially from the past. Well, not even the past 2 weeks, the past week, really, because I'm on a smaller time frame, so not the past 2 weeks. Yeah.
yeah, but that's why I'm at, for the week, just to kind of like simplify it. I don't know what's going on news wise and stuff like that, but just looking at the weekly, that's what I'm thinking about.
Segue to go into the news.
Yeah.
I'm gonna monitor this. Did get a bullish signal on the 5-minute off this gap. So yeah, we're gonna monitor that. I still see the market coming down right now to about 65, 82, maybe even 80. So if you're not in buys yet or you haven't added, it's a possibility you might be able to hold off and catch some buys up under there. But we'll see. It might be already active right now. But while we wait on that, let's look at this news. Starting tomorrow, November 11th, we only have Australian dollar news. We got a Westpac consumer confidence and NAB business confidence. It's coming out at 6:30 and 7:30 Monday night. Then Tuesday, no news for AU or USD. The only thing we do have though at 2 in the morning, if you're gonna be up, is GJ. Which I'm probably catch that while I'm driving if I can. Set an alert around 1:15. Run 1:30. Actually 1. Just to see how the market trades into that. Keep an eye on that. I might add some volume for GJ around that time. Probably will. Unemployment rate, unemployment change. Probably gonna add some volume. So that's it for Tuesday. Wednesday, big boom, 8:30 in the morning. CPI, right there, reading the week, 8:30 in the morning, CPI. So we lock and loaded for Wednesday morning news release. Inflation rate also, core inflation rate, yada yada. Followed by a 7:30 at night AU unemployment change and employment change. Unemployment rate and employment change coming out at 7:30 for Wednesday evening. Thursday, a lot of early news for the Eurozone. Kind of run at 3:30 to 5 a.m. Got a lot of employment change information coming out year over year, quarter over quarter. Thursday, we have PPI coming out after CPI, 8:30 also, and then followed by initial jobless claims. Well, that's all coming out at 8:30 actually. And it is 8:30, right? Am I saying this right, bro? Or is that really 7:30?
Usually, yeah, I thought what it says for Thursday for those news releases.
8:30.
Yeah, usually it's supposed to be 7:30.
Yeah, let me change this on here, man, because
I'm gonna check mine.
let me change this because I think this is kind of messing me up.
Yeah, 7:30 on mine.
Hold up. Me. I'm gonna come back to I was getting too much into my account. How do I change it? Economic calendar. Is it on the widgets? Add to your site. No, alerts manager. Billing. Document. Not on the settings. Messages. Profile. Oh. Bam. Save. Okay. Economic calendar. Let's go back. Share this tab instead. And let's go back to what we was talking about Thursday. No.
9:30.
Oh, look. Like I went here. Settings. Profile. Down. GMT. What is supposed to be? Eastern Time. US Canada. No, not Lima. All right. That's right. Oh, is it Atlantic?
I thought it was Central.
You're right. That's what I had it on.
Damn. Well, I don't know why it's
Central. Save. And showing, see, my clock showing 21:44. That's 9:44, but it's 8:44, right? Yeah,
yeah, 8:44.
And if I go back to my calendar, it's showing 8:30. All right, maybe I have to trick it. Maybe I have to go here. Go to my profile. Mountain time? Maybe because of daylight savings time. Yeah, that's what it was.
Well, they should do that on its own.
The website should.
Yeah, that's
my computer does it, but this website is not made like that. So there we go. So daylight saving time, I gotta put it at mountain, and when it's but that's crazy. Yours not doing that, right?
no.
Huh? That's weird. Anyway, back to what we was talking about. News. Everything is right. 7:30 Wednesday morning. Inflation rate. Then we come here Thursday morning. Shout out to my bro. His birthday. Oh, you got a fire-ass birthday, boy. You gonna make some money. PPI and continuous jobless claim. 7:30 in the morning. And you get a Fed chair speech at 2 o'clock, looks like.
Oh yeah, I'm going heavy.
Followed by J What they call UJ, GDP growth rate. Oh man, it's a lot of unemployment rate. Chinese yuan. And on Friday, we got a lot of morning news at 1 a.m. for GJ, goods trade balance, GDP growth rate. Then we have a 7:30 for Friday for USD, NY, Empire State Manufacturing, retail sales, and retail sales. Excluding autos, and one is excluding gas and autos, month over month. Yeah. So this is gonna be heavy news. Friday for sure, Thursday for sure, Wednesday extreme. So yeah, it's gonna be one of them scenarios where you probably could get a nice position early in the week, and depending on if you're on the right side, and the news comes out in your favor, and the market trades that news in your favor. It's a lot of things got to happen because the news could come out one way in your favor, and the market trade against you. So if all those things work out, then yeah, you'll be in probably be up pretty nice.
That's a fact. But yeah, overall, we got high news that will add more, will add some volatility, to the market. So yeah, man, this is good. A lot of people's gonna wait for that CPI inflation news, so we could get in a bit of a range consolidation on a larger time frames, and until that release happens, and we shall see. But yeah, I would like I said, for it to go in this little bullish type of uh, retracement of what it did last week, and then come Wednesday going into Thursday, we can get some sales, probably a nice little kickback on Thursday morning to get into more sales to continue. But yeah, we'll see. That's my bias for the week. But yeah, keeping it simple, man.
I agree. Let me see. It was this documentary I wanted to tell you about and tell everybody about.
The one that you put in the Telegram.
That one was one, but it was another one that kind of just shined the light on something new that I didn't know about, and it's very informative. It's something that was happening in a time in America we wasn't kind of aware of. You had to kind of, I guess, already be in the know some kind of ways type shit to know about this shit. But the China Hustle. It is on. What did I watch it on? I think that 1, 2, 3 movies shit, but I want to say it might be on like Netflix or something like that. Or you might be able to find it. But basically, just to give a brief thing, because it's like real deep. But basically, it talks about what was the next move for, like, if you will, if you want to call it, like, greedy investors or greedy bankers to get their hands on a pretty growing and liquid market after they got all that bailout money and all that low interest money after the stock market crash. So it's like, yeah, we had some bullishness in our markets, but it was another play that was happening that made people even more wealthier. But it was, in a way, it was kind of geared with fraud too, but it was it was low, pretty much not low, but like no infrastructure for how businesses were audited in China and shit. But overall, it's just showing you what was the next play. What was the next play? And like I wasn't aware of it. Like it was a shocker to me. Like, and I really be on top of what be going on. You know, for the most part. Recently, I've been watching a lot of history on what went on in different scenarios of the economy, but this one I wasn't aware of. So it was like real good. It was like a lot of shock value and shit. Very informative. So I would say go watch that. The China Hustle. It's a real good documentary.
You said you gonna put that one in the Telegram?
I will right now.
Yeah, for sure.
Click
on. Hold on, I'll be right back. 1 second.
Yeah. Y'all look at this tab. This is it right here. That's crazy. We can go ahead and watch the whole damn thing right here online. But yeah, let me put the link in the group. But yeah. I got a whole list of different movies and documentaries I plan to watch in my free time, just to add a little bit more knowledge as to what goes on in these insufficient markets where people make multi-millions, upwards of billions of dollars. Well, really billions. I think the number they said was like, fuck. I think it was 50, maybe 40, 50 billion that was lost. Yeah, because people were investing in this and, kind of like a pension fund, retirement fund type scenario. The sad story, like all these documentaries, they talk about the issues, and then at the end, they interview all the people that was actually invested into the companies and lost money and shit. Like the sad story is showing them how they pretty much lost everything and had to go back to work. So, but one thing that is key out of all those documentaries that kind of show that type of fraud aspect of the markets, it kind of stems from putting your trust in kind of so-called reputable companies. Because I'm not sure, and then again, a lot of these reputable companies that you do get in, bed with, as far as when you put your money into these accounts, a lot of them are reprimanded, but it's a slap on the wrist because it's in the form of fees. And, when you're charging a big bank like a Chase or, Wells Fargo or anything, millions of dollars in fees, that's like a slap on the wrist of them. They could keep going about their, regular scheduled plan. Even with that fee, they'll pay that and keep going. So a lot of these companies that were approving these buys for these people for long-term, growth, they weren't T-rowing price as far as from the documentary. It wasn't Vanguard, it wasn't all these highly reputable names. It was one company was talking about this specific was it was a bank. It was like Crown or some shit. Like a bank you never heard of, like one of those investment banks or something. But regardless enough, they had enough customers where they can sell off enough and make it profitable for them because they was collecting fees for selling the shares. And once it was too late, the markets tanked from the short sellers. But go watch that. It was dope. Dope ass documentary. Kind of explains if you felt like you don't know what happened from 2010 to 2018, then that documentary kind of shines a little light on some of the things that was going down. In America, we was kind of getting a whiff of crypto slightly towards the end of that range, but also really just picking up the pieces from the 2008 crash, which I want to say that's when Obama got in the office. Yeah, because he went 8 to 12 and then 12 to 16, and then Trump came in. So that's what we were blinded with. I'm gonna keep it G, damn. Right around that time, 2008 to 12, then 12 to 16, niggas was blinded with the Obama euphoria, especially that first presidency. We were just so damn happy. Nobody was looking at that move, that play. But it was a good documentary, man. I gotta watch that, The China Hustle. But back on these markets, I was about to close. We kind of teetering around this 65.90 area. Looking like we might be closing with another indecision candle, which is good. If you didn't catch anything, you see the move. The market is undecided, so it's still not true. The people who are happy that they're in buys have a reason to get out. The people who are now in sales still have a reason to probably stay in because nothing really is true just yet. You can go off the wicks, but kind of like Jay said earlier, overall, probably looking at the weekly, we might be overall looking for sales. We do know we have a big sell-off for the hour. Big sell-off for the 4 hour. Even though we already have one for election. And the daily is ugly. Not low enough for this bearish engulfing to be true because it was really at the low, but we could see sales still kind of settle more near 65.20 possibly if we continue on the daily. So we gotta wait for a daily close. Even if the market trades down by tomorrow morning, that's still not a close. The market could reverse, find liquidity up under here, and trade right back around here at 65.91 by noon tomorrow. So let's go to the week. And the week is still going up this bearish engulfing, and nothing has changed, even though we did get some ugly movements with this. They call this like a dark shadow, I believe. Let's look up that and see dark shadow. See what that looks like. Let's see. So it's also known as a wick. There's a line on the Japanese candlestick chart that represents price action outside of the opening and closing prices. Upper shadow. Oh, dark cloud cover. That's what I was looking at, not dark shadow. See what the images look like. Not really dark cloud. So let's look at candlestick. All candlestick patterns. Let's see. See if I can find what we see on the weekly. It's a lot of shit I ain't never heard of, to be honest. You see it. 3 stars in the south. Stick sandwich. Two blacks gapping. Let's see, all inside bar. Yep.
They had to slide on here twice.
Yeah. Now we need all the views we could get.
Let's go, man.
I was trying to find the definition we can call this. If you look at the weekly, kind of got like an inside bar situation going on.
Yeah, especially with all the way the weeklies have been opening with those gaps.
Mm-hmm.
So I've been using your technique as like visualizing the candles opening on, on the close of the previous candle, so it looks, somewhat
Uniform.
normal,
Yeah.
uniform. Yeah.
Nah, facts.
Which if you would do that, that's why I would see why I'm looking for some bullish movement, but ultimately bearish movement.
Right. Yeah, it's been doing a lot of weird shit. I'm sitting the last time we had an inside bar like this. Market don't even know what to do.
Yeah, these could be those ones that like if you do want to get some buys, you might be sitting in something for a good minute. So and it may squeeze out a good 20. So these are not my super heavy positions for sure.
You said
Especially
you
starting.
you in a super heavy position?
I said no, this is not a super heavy position.
Got you. And why is that? Simply because it's Sunday and the market ain't really flex yet.
Yep,
Simple as that.
simple as that. I mean, what I didn't enter off of our, color change
Yeah,
engulfing.
that's what I was talking
So
about at the beginning of the live. Like we didn't even have that set up yet.
yeah, no, you're just going straight. I just looked at structure and just saw that.
Yep.
And you talked about it earlier. I was listening to it.
Mm-hmm.
How you said sometimes you can have some bullish movement without your signal, or without our signal being shown.
Right.
Um, so sometimes you can just look at structure, look to the left, and enter in something kind of impulsively. So, and on those, I'm not heavy.
Gotcha. Hmm. There we go.
What's that?
It took me to come all the way back to around 2012. Really, yeah, 2012 to find a inside bar scenario, and it was pretty much right around here. We had a weird scenario kind of going on with this candle gapping up instead of opening right here. Then if you look over here, right around here, we had like a middle type of scenario, the market opening up down here instead of right at the open. It's not as bad as this one, but this is the only year I started to really see that type of scenario happening. Uh, Even right here, got a big gap up going into 2012 on November. A lot of gaps here, but kind of like that inside bar scenario I was looking at. And I know this area is pretty much the years we were picking up the pieces. Um, I know this 2011, 2012 was kind of significant for the last year of Obama presidency before he got reelected. So it's a possibility that could be the reasoning for that. But I know these years were picking up the pieces after the financial crash. And I see a lot of um, weirdly disproportionate candles primarily happening around this time. Just like to look at patterns just to see if I could find older scenarios similar to the ones we currently looking at. Big ass guy. Just came down to 60 cents.
You said we have no news tomorrow?
Um, no, it is Australian dollar news. So yes, it is news, but not US. But still, let me see.
It'll be tomorrow night.
Tomorrow night, right here, 7:30 and 8. 5:30 and 6:30.
Sure. Which is pretty much Tuesday's candle.
Yes, exactly.
Yeah.
The way to look at it.
Okay.
Pretty much Tuesday's candle. So yeah, Monday is
So
gone.
tomorrow, no news.
Right.
Okay. All right.
Yeah, Tuesday. Like I said, we probably get some news late at night for GJ for the unemployment rate, but that's pretty much it until Wednesday. So that's gonna be kind of dead on Tuesday. Yeah, that should be tripping me out, boy. Yeah, GJ gonna move. Look at when you see stuff like this. Look at the employment change.
When is it gonna move? Well, especially EJ. EJ been fucking playing with me.
Yeah, EJ need to figure itself out before you can trade that again. But the GBP employment change, they got a consensus of negative 50K. The previous was 373K. Like, what the hell? How's your consensus gonna be like, yeah, We was way off. This shit is bad. This shit is bad. I just be looking at big jumps like, man, that's crazy, bro.
That'll make the market do something.
Right. This is a beautiful sale, boy. Waiting patiently for this shit too. Like, nigga was calling this out. I was calling this out when we had this breakout.
Oh yeah, on Australia.
Yeah, and the market started
Yeah,
trading.
that one.
I was
That
like,
was the one.
yeah,
That was the one.
that's why I was so pissed off for this one. I was mad because I didn't catch these sales. So I was so adamant. I was like, well, if I ain't gonna catch the sale, I caught this low way down here and bought it all up. It took pride, but that finally got me my entry for that the sales we were waiting on. I was like, that motherfucker waited perfectly.
Yeah, that was tanked. Yeah, that shit was crazy.
Yeah.
I was like, well, those things fucking happen like once every quarter. I mean,
Please.
oh, shit, to be honest, once every 4 years. So that was straight election action.
But when you want to be real, like how many pips was that? I mean, that was what? Just even for the election, 66.41. It's about 65. It was about like 140, 130 pip move. Like, I'm pretty sure you could find, maybe not this fast, because this is the 1 hour time frame. Maybe not this fast, but I'm pretty sure you could find moves like this on Australian dollar all year.
Yes, but yeah, like you said, it's not gonna be like that.
Right. Like, okay, this move right here, this same move was pretty much this same move. You know, let's say if you caught this structure and caught the break of that with a retest. So yeah, that same move, which is 65.58. I mean 66.58, all the way down to 65. So yeah, about 120 pips right there. But that took Thursday all the way into next week of Tuesday night or Wednesday late morning. You had 2 times to get out of that sale.
Yeah,
It
and
was a
that's
whole, that's like 5 days, including the weekend.
right. Instead of just one day,
Yeah, one evening.
one evening. Yeah, facts. One session.
So you're right. It will give you that. You just got to be patient and hold on to them. It'll give you those larger moves, but it's going to also give you a lot of scenarios to make you think, okay, I need to get out of this move. Maybe this is not working in my favor. Or maybe
Right.
I missed the opportunity to get out. Market moved against me, and then it came back down. I can get out again. It's all kind of ways you can look at it, but yeah, we do get those moves quite often. You know what I mean? Like, even just looking on the 1 hour, like that same move right here could be had from right there, maybe, and then maybe that same move could be had from right there. But now you're talking about pretty much the whole month of October gave us a shitload of pips.
Yep.
When you look
No,
at
that's true.
September, gave you a lot of movement. Going back from August gave us, but you got to hold on to them longer. So yeah, we don't get these moves in a session like that, pip wise, but it all works out. It all works out.
That is a major fact, boy. It all works out.
But yeah, man. gotta learn to hold them positions. You'll catch those pips, large amounts of pips. But yeah, man, I think people who added buys are pretty happy right now. We also did get a bullish 30-minute engulfing off of that area of interest off the 5-minute. When I was just kind of weeding down, I kind of looked at this kind of little range as the last opportunity. Like I was saying, it had the potential and probably still has the potential for sweeping these lows or automatically creating a new low, a deeper low for Asian session. It can, as long as we don't break under 67, 578, we should still be good. But as of now, it's still ranging, but you know that is positive right now. But like I said, it didn't break this structure. That's what we needed. You know, that was strong structure, kind of looking like a head and shoulders type pattern. Once we break this, now we talking. You know, then when we break this high, the Asian high, we even talking even more. So we need to see that bullishness play out. And like we said, if this does work out in positivity, we'd be looking to take profits and look for sales around 66.20, 66.25 area. That's pretty much 50% of the range from Friday. That's selling off we did on Friday. If you want to see it based on the field, you go to Thursday's high, or better yet, New York session high to New York session low on Friday. And then we get a mid ground of 622. So anywhere up in that range, be a good area for take profit if we do get structure to build into this bullish. And if we start to get sales on the 1 hour, start to get a bearish engulfing from there, then looking at it, we'll have clean traffic even on the 1 hour for if we do get sales, because the market could continue to go higher and maybe give us sales here, or maybe it could go higher and give us sales here. It's anybody's game. We don't know how it's gonna go. We can predict it with a stupid good, damn near 90% positivity rate type educated guess, but all that is still up in the air. Even with all that 90% positive educated guess, it's still a roll of the dice because you don't know. All that math you came out with could fail. So, you know, it's not a chance. It's not a reason to throw that math in the bucket, throw it in the trash. It's just like it didn't work out. Simple as that. I ducked, and he came with an uppercut. It didn't work out. I went left. He swung with the right. It didn't work out. So,
Whoa,
it's five.
that's good.
Yeah.
Yeah, to add to what you were saying right quick about Mark Douglas, he said, you know, it's patterns and trading and stuff like that, but that you could predict, and they you know, they come all the time, but the results don't always match the pattern. He said patterns and results don't necessarily have to be connected, and they're not
Right.
usually. He said, so like you could have a setup. Just because the setup worked last time don't mean it's gonna work this time, or because it didn't work last time don't mean it ain't gonna work this time. So the patterns are not connected to results. That was powerful. That's true. I, you know.
And more so a reason to not want to switch your strategy so fast when it ain't working.
Right.
Good and get enough data to show you that it ain't working. Just because you got a bad week don't really mean that.
Right. going back to that video clip I posted with the 5%. Now
Mm-hmm.
I wouldn't try that at home, so to speak, but I wouldn't really go look that up. The turtle trading, that's who he was talking about when he was talking about the trader who had the um 5% win rate. That was the dude who made turtle trading, and he did an experiment back in the 70s or 80s to see if trading was like a gift or it was something that could be taught. And he learned that it was something that could be taught, but they had to follow the rules. Only, less than half of the people end up making it through following the rules, but you know, of turtle trading. But and they use Dime chain channels to that's it. And it wasn't about the win rate. The whole thing was take the take the setup every single time.
Yep.
And even and then they said also even stay in the position when you see the whole position giving back, like you went up 50-70%, and you seeing it, you holding that position, you seeing it give back, you got to let it give back. And it was real challenging for a lot of the students, and because they couldn't just follow the simple position. But the one dude who did, who was top of the all he did was follow the rules. He made 5 times more than everybody else. And they use ATR stop losses, by the way. One ATR was their stop loss. They had to use a stop loss. Um, um, yeah, just look up that whole turtle trading thing. But oh no, so the whole point was take the trade every time because you know even though they only expected like a 50% win rate, and because that one win, that one time that you do take it and it works out, it makes up for all of those losses. So when you're looking at it from a mathematic perspective, and the clusters and all that, that's why it's important to take that same trade, that same setup, and that's all why you could have a setup and you'll go through a losing streak because it's like those clusters. But if it's a good setup, it will pay off and it will make up for those losses. But oh no, and the last thing he said, you got to cut those losses quick and let your winners ride. You got to do that. That's key. Um, but yeah, other than that was the system. It wasn't nothing. It wasn't nothing spectacular. Um, they used Dime chain for entrance and exit, ATR stop loss, and which is the Dime chain just average the 20-day highs, 20-day lows. When price crosses a 20-day high, you buy it. And it exited when it crossed the 10-day low. That was his system. That's turtle trading. Um, yeah. So just to add to that, because I wanted to go. I said, well, who is this trader with 5%? I wanted to go see if he was just saying some shit or. And that's what he was talking about. The turtle trader, man. Uh, yeah.
That was a dope little story. I gotta revisit it again, but I didn't. I know I read it a while back about the turtle traders.
Hold on, that boy bumping that rocker. See, yeah. Damn, I remember that day. Wait, where we recorded that bitch at?
In our house.
In Flagstaff? Falstaff?
Oh, boy, we did that whole.
Oh, by the old house in Algiers. Damn.
I don't know what we recorded in pause there.
We finished it in Falstaff, if I'm not mistaken.
I think so. Cause I thought we was pressing up CDs in the old house too.
I don't know.
Yeah.
Must have was the next one or some shit.
Right.
Yeah. Talk about how the market was different from then and now. Like, what you see the difference? I just see saturation, and yeah, just a bunch of saturation.
You talking about what you mean then from now?
Like the music industry.
Oh, yeah, of course, oversaturated. Like the entry, the entry to Bear is like
Yeah, none,
free.
non-existent.
Yeah, like real talk. Like you could really, if it works out for you, you can literally blow up in fame by recording your own music, filming your own videos, and posting them for free on YouTube. Nothing else. Like the simple thing of that. Like that alone could make you a superstar in today's world.
Yeah,
You'll be niche to YouTube per se. You won't be probably a radio hit chart topping, but it's possible.
shit. Damn near nobody make it to that spot anyway.
Yeah,
Chart
I'm
chopping,
about to
chart
say
topping.
nowadays the influencers have more power than the
Yeah,
musicians and the actors and actresses.
hell yeah.
yeah,
They know Kai Cenat, what's his name? Drewski, Mr. Beast.
yeah.
Come on, man. Mr. Beast, to me, it seemed like he the fucking Elon Musk of
He
that
is.
shit.
He is.
Okay. That's what I thought. That's what it feels like.
Yeah.
Yeah, so it's not so much about talent as much as it's about
Nope,
being an opportunist.
nope,
Like,
no talent involved.
but it's talent and
I,
consistency. I
I
think
was I
I
was about
now
to say
say
it has to
consistency
be
is a
talent. Like
talent.
that's a yeah, that's a skill.
Consistency
Like
is a fucking talent. Yeah, like
Because a person
consistent.
like Kendrick Lamar could have made it in any area of hip hop. Like he's not the type of artist that's only good for this generation. He could have made it in the '90s, made it in the 2000s, like all that shit. Like he just raw talent. But then you
Yeah.
artists that even though they making it now would have never made it in the '80s, '90s, or 2000s.
Who?
Let me see.
Travis Scott.
Yeah. Yeah. I would say going back as far as back then, yeah, I could give you that. But I
Yeah.
mean that's like a whole new wave. But I'm talking about like maybe people like fuck. Damn. It's hard to say because it's like this
Yeah.
game is so damn fake.
I know. I shot buku blanks thinking about that shit.
Like who is hot right now that would have no chance in hell back in the day?
everybody. If you say who's hot right now,
That's why I was like. That's why I'm like, who?
everybody.
Well, I
You
mean,
said
Like
Kendrick.
nigga,
I'm like, other than that,
bro, you gotta
shit.
think about how everybody was so unique. Like, dog, my discography back in the day, like I remember at one point in
Yeah.
time, like I had the Shaq CD, I had Big Pun right before he passed, I had fucking Linkin Park, uh
nah, fat.
like you know what I'm saying? Like it was just like I don't know, it was just a breath of fresh air. Like music was just so it was good. You know what I'm saying? The shit was
Yeah.
real. Now it's like
One person represented so much, and that nobody else represented. Like
yeah, yeah,
it's like
exactly.
people was really coining frequencies and shit. Not coining it, but like
Right.
branding their own frequency.
Yeah,
You
like
know,
if I wanted that feel, I can go to this
like
person
you ain't getting
instead
no
of
Buster Rhymes and DMX. Like you know what I'm saying?
facts.
Mystical even. All of them dudes just was
Hey,
it
yeah,
was
yeah,
energy that they
hey,
was selling.
dog. Bone Thugs and Harmony.
Right, right.
Like,
Uh-huh. All the groups and shit.
all the groups, yeah, bro. I don't know. It was just a whole different era, but. Yeah, the shit is really weird now. Like it's to the point where like nigga, I'm on some Andre 3000. I don't want to listen to sound. I mean to voice.
Yeah,
I
right.
just want to feel the music. Like give me some
That's why
fucking yoga
lo-fi.
type music.
That's why lo-fi the top trending music probably right now. You know,
Yeah, that's true. I mean, shit,
you,
I be vibing to that while I'm at work.
yeah, niggas don't be wanting to hear. I mean, words distract you. You might not feel like that. Like some songs you like, but you might not agree with that shit today. Like
That's a
we
fact.
definitely go through phases and cycles and shit, so to speak. So it's like that's why like sometimes you feeling some shit, sometimes you ain't. Even food, certain food,
That's
you know.
true.
Yeah,
Damn.
the energy
Yeah.
and the energy got to match.
Yup.
We don't
The
have just no
season.
one stagnant, energy all throughout the month. That should be
Yeah, that's
moving.
fact.
That's not just women, you know,
Yeah,
with cycles and shit, so to speak. They shit just physical. I was mental.
yeah.
But now, looking at dollar,
That's what I want to look at.
yeah,
Yeah, man, I'm about to say we didn't pull up the DXY at all. Or did you? I know I jumped on a little late.
I did.
nah, don't worry. I was gonna put
I'm about to
alerts.
say, no, I already know, yeah. Pip be, yeah, no, you be holding it down. That shit does help. Like, you got to look at that.
Yeah, well, that's my main thing now. Like how TradingView only got so many alerts and indicators and shit. I'll
Man,
use it
that's
on
why
there.
this live. This live has been so helpful, bro. Like,
I
to
know.
a nigga growth. Because y'all boys be pulling up that shit. So it makes more sense. Like,
Right.
you know what I'm saying? Okay, I'm gonna stay in this position a little bit longer because that DXY looking good. Like, yeah, that type
Right.
shit.
Right. Yeah, that confluence, man. That shit. I mean, correlation. That negative
No,
correlation.
no, you're right. Yeah,
Crazy.
yeah. That ain't that confluence. Yeah, that's a
Right. Right.
confluence.
Right.
Even
You make it confluence with your
yeah,
play. Uh huh.
yeah, man. Yeah, that
Yeah.
should be golden, bro.
But yeah, I see these swing highs. You got one on the dollar 106.49. And you got one at 107.33.
Mm.
So I see the dollar could go up to those points. Then you got a quick pass one at that it hasn't broke actually. Well, it broke and then came right back below it at 105.86 from damn, that's way from March 6th. I'm looking at the week chart.
Oh,
But yeah, those are the three highs. Like from March, they only got three highs. Until then you got to go all the way back to fucking the 22 September of 22. Um, so yeah, once we get past what's this year's high from 10-2 is off to the races.
yeah. And weekly is as it keep going up. That bitch giving cleaner and cleaner traffic to the left to sell into. That's all I'm saying. It's a question of when and if it's going to turn down.
But I wouldn't recommend thinking like, and like with the turtle, they couldn't predict the future. That's one rule. They could not say, I think this gonna happen. I think that's gonna happen. They couldn't say that. It was forbidden. You see, they only could deal with what they see. It was forbidden to predict the market. So you know, I think that kind of trading is dangerous. Now you definitely got to have your if this then what? If this happened then what? If that's happened then what?
Right.
I think it's best to just do it like that because like saying, well, this thing is pushing up so much, that pullback gonna look nice. Even though I did see an article about people, trying to the Trump sweeps and stuff like that, Trump red sweeps, and seeing if the market interested in that. But when you think like that, it fucks with your It fucks with you because you really dealing with something that's really not there. Like it's going, you going too back into like the pattern thing. Like yeah, that pattern, the pattern gonna always equal the result you want though. So it's like, you know, don't think just because a market is rallying like fuck that it's just gonna turn around, and vice versa because it's selling off like fuck. Like what Audi, that shit been selling off since we've been doing these things, the last month or some shit. And you know, like I was saying that, oh, it gotta turn around at the no, the fuck it don't. No, it don't. I just I did a demo trade, and I was just you know, on TradingView, just playback mode. You can actually, you know, have money on the bar replay shit on TradingView. It's pretty dope. I would suggest y'all, you know, play with it because you could test your strategies and shit. But it's only on the day chart, and they got
Right.
a button to where you could press random date. I think that's the best thing because it literally just go to some random date and you just start right there. And but when I didn't cut my losses quick, man, I showed that shit. I was in drawdown for 2 years before that shit came back. You know,
What you a th-
literally, like literally. I was just pressing go
Man,
next. Man, 2 years hadn't passed before I got so like you gotta cut them losses quick. But the point I was making, oh, I'm thinking the shit was gonna come back to this point and this and that. No, man. You better cut them losses. You know, another thing he said in turtle system, when you in drawdown, the best thing to do, you want to get out of there as soon as possible. Like, don't try to.
on that? When you was doing the play reback,
Yeah,
was you trading with the paper account on TradingView?
yeah, yeah.
I'm gonna try that shit.
It's fun as hell. It's
I
fun as
know
hell.
that. I'm gonna try.
And you it because you get that. Of course, you don't get to see the candle going up and down like you say, but
Right,
you still do get to see each candle move. Like so,
right.
and the fact that you could play it, it could play by itself. That makes it feel like it's, you know, that real market pulse.
Well,
And
while it's moving and playing, you could just like enter, like
you
say
could pause it.
you
You
could
could pause. You could pause after every candle, put on whatever indicator, and enter. Put a stop loss and take profit. So
yeah,
you could really back test any system. And so the system the system I made with the rectangle from swing high to swing low, perfect. It works perfect on there. Or just using those swing highs and swing lows. Um, yeah.
no, that'll be fun.
That's it, man.
That'll be fun. Testing out the daily and bullish and bearish engulfing.
Hold on.
You try, man. See what the Dappy pair is looking like on the daily. UJ is looking like it's setting up for a buy signal if we close, but it is at a high compared to this little trend, even though the next high I could get to is quite a bit away. But yeah, definitely struggling around here. Next area right here is struggling. Wow, let's see if we can see something. Okay, so that was just a pullback to here. UJ. EJ. Too soon to tell on GJ, but he's still in play on this bearish engulfing. That's all I have to say. On GJ, AJ, we just got a bearish engulf. Feel like it's trying to pick up.
I had took a buy on GJ. A swing low confirmation, bullish setup after the swing low confirmation. Yeah, definitely. It broke out in range. It broke out that range, and I played that for sure. Took the little breakout from after the swing low. Got in a little late. Actually, I got in before the swing low. I thought it was gonna happen. Yeah, I got in a little early. I don't like this setup, but it came back to, you know. Yeah, on the 4 hour is actually the entry candle right the hour that the 4 hour that just started. So it's still a good entry on the 4 hour.
GJ?
GJ, yeah.
EJ on the 4 hour. Yeah, it did reverse from this little structure point at 196.92. I would say as long as you got in at 197.60s, 197.70, I would say it's good buys. I mean, or even as high as 197.90. It's still in profit right now.
Yeah, 197.94 is actually the entry on the 4 hour that open, pretty much the open of the 8 p.m. open.
Right.
But it went under the 100 Friday, and then by 12 p.m. Friday was right back over the 100, and now it's over the 52. So I got a 100 buy, a 50 buy. Plus you got that swing low and structure built after it. Yeah, it's bullish, and it's definitely going to 199.51, the previous swing high. So,
that's what profit at?
huh?
That's what you'll take profit at, 199.51.
Not on this one because this is a long term play. So I'm way past that. Yeah, my take profit is. Let me see. What we got? Damn, that's a swing high. Wait, I thought I just. Oh, yeah. Yeah, mine is. My shit way up there, man. At 230. I'm looking at the all time.
230.
Yep.
230? Actually, like the number 230?
Yeah, 230.
What was you on the monthly?
Yeah. Well, actually, but
you gonna be out of that trade next summer then.
now at the rate that this motherfucker moved, this shit moved 300 units. You know, in a fucking day.
Yeah, that's
I mean, that's. Let me see. Why did I do that? Oh, that's just double my stop loss. So I just did that. That's all. This is a small ass position though, so you know I ain't really worried.
Gotcha.
And that was something I think I entered that Friday. Yeah, I've been into that. So yeah, this on my Swank account. There's some shit that but yeah, that's that. I see that you always have the same because my setup is pretty much going off the swings. I use the EMAs as well, whichever one come first. But if I got the EMAs around them swing points, even better. But I just go from the swing high to the swing low on at least the day time frame, the day, the weekly, and I make that box. And as soon as that thing cross the middle point, I go with that. So that middle point either gonna be the reversal point or it's gonna be the the resistance. So support or resistance that is, but I just the whole theory is once it cross the middle, just go with that. And so this crossed the middle on GJ at on Friday on 10/11, and then it came back, but it ain't come back since. So it crossed that middle and then went up. The high of this rectangle is at 208. So yeah, 208.34, 208. I mean 03. That's
Right.
really like my target. 208. You could just say 208, pretty much. Yeah, like that area. That's my that's my actual target. I'm probably gonna put that stop in. My take profit and oh yeah, that's cool. Ah, that's just less than 2%.
What y'all think about EJ on the 4 hour?
EJ.
Y'all, I know Jay, you kind of got burned a little bit on EJ trying to buy it up, but now that we broke out of consolidation on the 4 hour, what you think we about to pull back up for a sale, or this sell off was a fake out? What you thinking?
Oh no, EUR.
Took
JPY.
all the way back down.
I think the sell off was a fake out. Not a fake out. I just think
I
I
mean,
still
it's
think
already reversing.
we got that bullish movement. Still we still got more room to go. That's what I
Yeah, it
think. I
definitely
think
looked
that
like
was
a
a lot of that was reaction from the
market.
presidency and the election and Donald Trump getting back in that thing.
But
Um,
was EJ, you think, the president?
say what?
Do you think EJ showed the election news? Really? Because that was like Tuesday, Wednesday. This sell off.
Yeah, I think so because the yen is influenced by America. Usually when the dollar up, the yen down.
Yeah, especially
So
when they know the
EU
fucking
up,
tariffs coming.
yen down. But this EU going down.
The
So
only
EU is influenced too because that's like the
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 sell
biggest.
happened till Thursday. Like we got the president news on Tuesday and Wednesday. Now we did get a push higher. Well, that was last week. Yeah, we didn't
No,
get.
it's Thursday. It happened Thursday. It broke structure Thursday.
Nah, it did break structure Thursday, but we got the presidential news Tuesday night, Wednesday morning.
Oh,
So that's what I'm saying. Like, was that new? Was this movement
Wednesday morning. Oh,
president
okay.
news, or was it from Euro News?
Yeah, reacting to America. That was the next day. Like you said that morning. Well, that was probably.
Nah, this is
You
the next
know,
day. Wednesday was the next day.
I'm looking at Wednesday right now at 4 p.m. Yeah, it stayed in that structure and break structure till 12 p.m. Thursday. So
True.
like during that trading day, yeah, that was Wednesday though. So I guess people waited because they was waiting on the results. They don't know exactly when the election be in all the you know what I'm saying. They just okay, well it's official now. So Wednesday was the first day to the outside world for real where he was officially the president, and it did react right at noon during that trading session. Well, noon our time. Which yeah, the London session still open at that time. So it definitely reacted. Like the euro, because I was trading a euro dollar for sure, and the euro went down too. So let me see, Thursday. Yeah, euro dropped too. Euro dollar. Tuesday it dropped. It started dropping Tuesday. See, it came back up a little Thursday for a retrace back up, and then fell right back down. So
Yeah, I see.
uh, actually, I'm in a sale on. Oh, that's you. Yeah, EU. Yeah, I'm in a sale on this motherfucker. And it look like it's a bottom though that I'm selling from. Or I'm selling at a swing low. I thought it was gonna break through. That swing low buy didn't. It's not. It's still in technically. Almost about to stop out, but yeah. So this, I ain't gonna lie, bro. I was looking at the swings on the playback. That shit legit. Like when you on the high time frame, like an hour and up, when you see a swing low and then you see bullish formation, that's
Yeah.
a setup, bro. That shit going the other way. The same thing with the swing high. So pretty much, I sell at a swing high once it's confirmed, and I buy at a swing low once it's confirmed. If it go with the positions I'm already in, and it if it confluence with the dollar as well, and that's how I'm rolling, bro. And I back tested it. That's all you need to do. You ain't got to, of course, your risk management, how much you're risking per trade, and all that. That's the only thing, which is the most important thing. But for setups, I seen what I need to see, and I tried it on multiple market. So like market moves from swing high to swing low. That's just how. That's what a range is. If it stay inside of that range, that's what ranging is. But as soon as it breaks it, if it break a swing high, it's gonna go up to that new high, and then it's gonna reverse, and you're gonna see it, and that's gonna be a great position to sell. Um, Going to AU. Yep, it hit a. Let me see. Yeah, AU didn't react much to the election, huh? It reacted, but not much.
And it had to, being that it had the US dollar in that pair. I know it reacted somewhat. That
Yeah,
shit,
it did.
nigga, Tuesday night, niggas was hefty in sales. And that's when I caught that buy. So yeah, it reacted like a motherfucker.
Yeah, Tuesday, 4 p.m. It sold off all the way until about. Then buys came at 8 p.m. Yeah, it made a swing low Tuesday night at 8 p.m. That's still the low right now. Like, I might pull my shit up. That's the real low. What low I'm looking at? Yeah, these are too far out. I'm gonna pull this up. So that
What's
low.
the German pound exchange? I know it's DXY for the dollar. I got EXY for euro, JXY for yen, AXY for
You
Australian dollar.
mean Great Britain pound?
Yeah,
They, I don't know.
it ain't GXY. I already searched.
Just search the whole thing. Just put Great Britain pound index. It might be the euro. They might use that index.
Yeah, you're right. You're right. You're right. You're right. That's crazy if they do.
Well, the pound is a newer currency. It started after the euro. One of them, I think the pound was first, and then the euro. Yeah. So
That was
pound kind of fell off. Your boy, he tanked the pound. Remember?
that Brexit. You need to study that Brexit shit.
Yeah. Your boy. You know what Brexit is? Cause of your boy, the trader, George Soros.
Oh,
He
it had
he
that.
fucked that currency up to where all this shit had to happen and shit.
That's crazy.
He sold it off and promoted that shit, and he's that popular, and a lot of people follow him, so they start hedging, even if they ain't believe in it. They was hedging against the shit happening. Yeah, in '92 he fucking sold off he crashed the pound. Like he ain't crashed it, but damn near he did it on his own. I think it was taking them sell positions like fuck. But yeah, ever since then, the pound been struggling to, have seniority over Europe,
Right.
because that's the crown. That's the crown's currency, Great Britain.
Mm-hmm.
You know, Great Britain pound.
Yeah, this shit ain't showing it. And it's got 25-year government bonds. Who holding that? 30-year, 40-year. Damn. 50-year. What 100 years at? I'm gonna buy it. Never get no big bitch. That's crazy. So the United Kingdom don't have an index? I wonder why. Everybody else got one. Why you ain't got one?
Because they ain't big enough, basically.
Boy said God save the Queen. That's what y'all talking about? The German British pound?
Yeah, Great Britain. Y'all was saying German. I'm like, is it German, bro? That ain't Germany.
Nah, that
That's
is your.
Hitler.
I'm about to
That's
say
their cousins.
Right. They stay
Great,
down the street from each
Great Britain. No, exchange. I see the exchange rate. Oh, US dollar exchange. Ticker. Okay. So what's the Great Britain dollar exchange ticker? Yeah, them niggas ain't got no exchange ticker.
They barely got a fucking currency. Remember, their strength was fucking financial shit. Like, they don't got no resources.
But that's crazy. Everybody else got an index with them. Why? It's
Not
not.
all of them. I don't think Canada got one. Just the top currency.
Billion dollar. Yeah, you're right. I guess you're right. It's not big enough. Damn. I'm gonna say, just compare your shit to the dollar, nigga. We good. We'll know where you at.
Yeah, that's what the dollar is. It's measured against all the other ones. So, you know, it kind of factor in all the other ones with the strength.
GJ. Look at Bitcoin. Oh my God. Just damn. Creeping on the slick.
Oh, no, it's been up. Yeah. Yeah,
Like,
I've been watching.
slick. I wasn't even thinking of Ethereum too.
Then I called, I said 100K this year by December.
81,000 and pushing. Come on, Bitcoin. Show them niggas some pulse.
And they tried to sell off too. They bought right back into it around 80K. So that's a strong push.
That's crazy. Nigga,
I
like,
was trying to, well, actually, I caught a little sale on a demo because I was
damn,
just marking it up because I ain't been looking at it. And
damn, I gotta get my phone back on. Son of a bitch.
Yeah, I would say when Bitcoin is rallying, just buy the dips for sure. That's something I never did. Like I always buy Bitcoin when it's rallying, and catch the sell off part. It burned me every time. I never really caught one of the rallies or the sales. Like I'm always on the opposite side of Bitcoin.
In the middle.
Hell yeah! Like I mean, my setup like I don't. It's like I don't follow my rules on that or some shit. I don't know. Um, yeah, that shit been trending about the 100 for
I'm
a
a
long
dollar cost
time.
average. That's how I get into Bitcoin. I do dollar cost average. Well, not like just the average. Like every quarter, I'll invest into it.
Oh, okay. Like actually buying share. Yeah, that's the best way.
Yeah.
Just stacking them up. That's the best way.
Hmm. Wherever it takes.
It's even
If
proven.
we
Like
talk,
trading it compared to dollar cost averaging. Yeah, that's the best
yeah.
way. Put the same steady amount, but buy when it's low. Yep. Yep. That was the best way to play Bitcoin since the beginning. Because them swings were so crazy. I would have took your account, at least half of it
That's
at some
crazy,
points.
boy. Like I just can't fathom to think that Bitcoin was at $15,000 in 2022.
I know, right? Like just 2022, 2 years ago. That's
Because
yeah, man.
then it was late 2022, nigga. It wasn't even like January. It was November, December. Like in a range too. Like you had a whole 2 months to buy that bitch.
Right. But no, it's FOMO. I told you with crypto, it's all about FOMO.
That's
So if
crazy.
people not buying, nobody is buying. But when people buying, everybody won't buy. That's why the price go crazy when it go up.
Yeah.
Like, yeah, this thing been
Shoot, boy.
Like what school said, you got to be on the opposite side. When people fearful, you got to be greedy
right.
and
Yeah, yeah. That
likewise,
fear and greed index. That's true.
yeah, man, you got to play that shit.
Matter of fact, let me check it right now. Oh, you can pull it up,
Yeah,
six. Let me see.
Being
Pull
greedy.
up the fear greed index. Yeah,
yeah, that fear
I'm.
and greed and see what it said. Cause
I think
I
it's
mean,
probably
I know that
high.
should be. I know it should be for stocks, but when you think about it, oh yeah, the
No,
greed should be
crypto got
high.
its own.
Yeah, yeah. Oh,
Crypto
okay,
got
okay.
one. Yeah, for
Nice.
sure. I didn't saw it plenty of time. I was wondering if it was just a crypto thing. I think it did start with crypto because I ain't never heard of that shit until there's, you know. No, you got to type it in fear greed index.
Oh,
I'm gonna keep it real. The only time I heard about that was through Trap, bro.
Yeah, yeah. He was the first one that talked about it in a sense
He
other
kind
than
of brought it
crypto.
up. Yeah, yeah,
Hmm.
for sure. That's true.
well,
Hmm.
fear and greed.
Yeah, I'm pulling it up right now. Wait, this is just for the market.
You trying to look for just overall fear and greed or like forex fear and greed?
Crypto.
Crypto
Yeah, last week it was 75.
fear and
Damn.
greed is greed at 79.
Yeah, so this the time to sell or look for sales. Yeah, 79 shit. Coin market cap. Last week it was at 53, which is neutral. And then last month it was at fear. So people was fearing they was getting ready to sell it off. Now this yesterday is greed. So yearly high and low. Yearly high degree was 92. That was March 11. I just saw March 11. Yep. No, that ain't March. March. Oh, I see. Yeah, that week right there.
Yeah, but look, March 11th The extreme greed was at 92. We was at 72,000. We at 80,000, and the greed is at 74. So what do you think it's about to go to? 100 plus.
Well, it's not. I don't think it's just off the price. They measuring like supply and demand too. Like because you would think right now it'll be at 100, but it's not. That's because it must be showing like that is not greed because it's actually just got an upward. Look at 100K is right there though, bro. Like you can see it on the charts now.
Man, ain't far from it.
Like, damn, bro. Don't we all just feel stupid that we ain't put in at least 1,000 when it was less than 10,000? Dang.
Bro,
Yeah.
I go back to the motherfucking Big Connect days, dog. Like we could have been doing the same amount, just like averaging it into Bitcoin instead of that shit. But you got to start somewhere, bro. Learn,
Yeah.
motherfucker. Damn,
They took
like,
the
nigga, we
they
got
took the
scammed.
concept, the right concept, and made people, buy into
Oh
them.
my god, them niggas was
Just
way
like the
out
church do. The church say
Singapore.
pay 10% to the church, but you really supposed to be paying 10% to yourself, minimum.
Remember that big ass fucking award ceremony six they had online and giving away fucking Lamborghinis and shit? Like it was, yes, the big connect thing. I was like, fuck, like this shit is legit. But show love, boy. Oh my god, damn.
They spent 10 million so they could make 50 off y'all ass.
Man, come on.
Shit.
No,
50 billion.
You can't lose with Lamborghinis.
you cannot.
How can it be a scam when there's Lamborghinis involved?
That's probably the most car right now. Like as far as like when you want to scam somebody, like that's the car people choose. Like nigga ain't
They
about to
fucking up the damn value of the Lamborghini, bro.
pull up in no Austin Martin. They gonna pull up in a whole Lamborghini because that's the car they're like, oh yeah, he rich.
Yeah, you don't even see no Aston Martin.
Niggas don't even know what the fuck that is. Some people.
If it wasn't for Rick Ross, nobody would know. Looking at it. Aston Martin music.
That's a classy ass car, man.
I thought he was Maybach music. That nigga a fraud.
Ah,
That nigga Justin Martin made by
You
Maybach
caught
music.
that? That nigga whole label a fraud. Oh yeah, I'm actually long on pound. Oh, I said that already. I'm long on. Oh, look at this UJ play. Yes, sir. It'll all work out. I'm long on UJ, and it's working. It is working.
Dumbass
Let me
bullet
see.
handle.
Yeah, I think I bought that. What did I buy? Look, why would I buy this? Why did I buy this? Let's see. What was I seeing? What, this breakout? I saw it breaking out, I guess. The 4 hours. Let me see. I got a symbol. What's this? Why is not? Oh, the fact that support is so strong, that's what it is. You see how price only touched it like once and then left?
What you talking about?
The support right there.
On UJ at 150.
Yeah. No, the green lines that you got drawn at the bottom.
Oh, down here?
Yeah. That's what I entered off, I think.
Oh.
Because like the fact that it was respecting that, so I'm looking at the hour.
Got in there. What you got in there?
I'm in at 152.76. So somewhere in that consolidation, I'm thinking. Let me see, because I think I've been in there.
152.76. Okay. So you got in out the
75. Yeah. Yeah.
Right.
Let me see. Did I get in there earlier today? Oh yeah. No, I got in on the 8 at 12 noon. I got in the 8 on. So I got in at the top of that consolidation.
I got
Thinking because I see what I seen. I saw the swing. I got in late. Just like that other one, right? I saw the swing high, the swing low, and then the bullish confirmation, then the breakout. Like that's my number one entry, bro. Swing highs and swing lows. Like the movement average, I combine that with I add a position. Like if it wants to cross from sell to buy on 100 or something, higher time frame. But like them swings just too easy. It's too easy not to enter, especially on the higher time frame. It just swung to the highest point. That bitch going the other way, bro. It's simple. You just hold it like y'all was saying when I first got on, and it's all gonna work out. Just hold it, and eventually it'll play out. You
it.
know.
Oh yeah. Man, I can't play that shit.
I know. That's been like the theme song of the month.
Nigga, we be having like 7 views, 5 views, and I'd had a video deleted because it had music on that. But I'm like, man,
Oh yeah. Not big music like that. That copyright shit. It's only more prevalent nowadays.
Bitcoin and the S&P. We're gonna call that it's gonna be the year of the all-time high.
Bro, we got Elon and fucking Donald Trump, bro, working together. What the fuck we about to have happen? But yeah, Elon called for an end to the Fed. Apparently, they came up on my TradingView news.
Well, would he send out like a tweet or something?
And you know, Elon, yeah, a tweet, of course. You know how him and Trump do.
I was about to say, like, how did he say it? On a tweet or on a Joe Rogan podcast?
Yeah, it's a tweet, and the tweet went viral. Supposedly, I still ain't even see the tweet because I was getting ready for work when I saw it. So I went to looking and I ain't find right away. But he tweeting all kind of political shit. You know, that boy happy now. He like, we in there now. Let's shake some shit up. Elon. As I look at it though, it's like that's what they all wanted from the beginning. What did the Democrats switch to Republican side behind closed doors? So they like, man, this nigga really do got them stocks booming. I know Nancy Pelosi secretly with that boy. She the Democratic leader, but she got the most stocks and shit. Like, she be active in them stocks. I know she ain't beefing with Trump. She'll say that shit, but she loves Trump.
She probably beefing with him as far as politics, but her accounts is happy.
Yeah, happy as fuck. Yeah, UJ dollar definitely gaining against the yen, and I think this gonna be a theme definitely for the rest of the next year. So as far as I'm concerned, I'm in early. Let me see the month chart.
Look at Tesla.
Oh yeah. Oh yeah. Oh yeah.
Is that an all-time high? Nope.
Yeah, Bitcoin went up 1,100 yesterday.
It's
Just
going.
1%.
Definitely going.
And Ethereum, damn. Oh, that's the month. The week.
The hedge fund shorting Tesla.
Ethereum was up 29% in November.
That shorted Tesla lost about $5.2 billion following Trump's election win.
What the fuck they shorted Tesla? That was a dumbass move. See how dumb these niggas is? Why the fuck would you do that? Because I thought I guess they was betting that Kamala was gonna win. That's dumb as hell. Why would you short the top booming stock? That's what they dumbass get. They about to get fired. Stupid ass.
I see what they was shorting it though. They was shorting it all 2023 and probably holding it 2022. I mean 2024. July they had a heavy short. But yeah, it never panned out for them in the long term, as you can see. They were good 2023 though, from since the summer. All them shorts.
Oh, I see. I was wondering why it was dropping. Nah, you go way back to that high that bitch been dropping. From that swing high right there on the chart. Yep. That shit been, you draw a trend line. Shit, boy, that shit just start recovering. From the highs, trend line from the highs getting lower and lower.
Down here.
Yeah, that one, yep, that one. You see, it just broke over that. That's why them options been going crazy, I guess.
Yep, little breakout and retest right there on October.
Mm-hmm. Yep. Even trend lines are lethal too. Those, it's simple. It's the simple stuff for real. I fuck with indicators, but I'm more like against them than for them for sure. Like, cause I only use a couple. And they only on my chart temporarily. I really don't really use no indicators. I use shit to like measure better.
That's what they best use.
ATR is for the speed and stop loss, or even a take profit. I don't even use fib no more because that middle line, I was like you said, I was only using that for the 50 point, and I wasn't really realizing. It's the fibs that made me realize what I was really trading. You know what I'm saying? Because when you think about it, like why are you drawing it from the swing high to the swing low? I said, well, fuck, damn, this is the actual move that is in right now. And I said, oh, damn, all markets really just moving from a swing low to swing high, and it's just gonna break one of them eventually, and do the same thing, go from high to low, high to low. It's shit really simple, bro. It really is. Like it's the human emotion, like
You have a split right here.
huh?
Why did Tesla drop exactly to the T at like $100 and not below it?
Because it's psychological numbers. Because niggas had puts right there, and that shit hit.
Never had no split.
Nah, they never split.
Oh,
Not that they only $300. That ain't even. I mean, not that I know of. I'm gonna say that because they could split at any price. Damn. Yeah, last week Tesla went up fucking 20-30%.
yeah.
Elon got so fucking richer.
In one day.
Yeah, well in that week, 29 a week. So he ain't get it all in one day. He got 8% in one day. That was Friday. He got 14% that Wednesday. So yeah, he got most of it in one day. 15%. And that was a gap up. That was definitely an options play. Mm-hmm. It was even up 3.5% on Thursday. Tuesday. Yeah, he had a tough week, boy. He was losing billions from Monday to Monday. Yeah, he was losing money.
This AUD trade is just kind of being hesitant. Not doing much. Look at the 1 hour. And it's just been ranging. Probably gonna wait for Monday. Probably start breaking out. See how we play that area.
I could think of one or two things that I want to do.
Yeah. Dow Jones starting to still pushing higher. Doing shit. VIX is coming down. S&P is in a little range. Not doing much.
That's why I just watch the dollar, man. Until that start moving, ain't nothing moving. Except the indices. Them bitches will move. They gonna move independently of the dollar. Them bitches gonna move. But all them other currencies, New York, London session, if it ain't that, or the Asian session in the middle of the week, ain't nothing moving. Ain't nothing gonna move. Bitcoin will move on weekends because that's what ain't nothing else to do. As you can see, $81,000 Bitcoin. That shit made me mad. I don't even get excited. I get mad.
Man.
Take this bitch off my watch list. Just go ahead and hit the 100 without me. Fuck it.
Just set an alarm and then take it off your watch list.
I'm gonna put the alarm say you fucking idiot. You ain't wanna be no fucking millionaire for real.
Oh man.
Nigga need real coaches and trainers out here, bro. That's something that don't exist in the market for retail traders, for real. We don't make enough. Like the nigga would probably charge you $1,000 a month for real, coaching and shit.
Yeah.
Not coaching, like training, nigga. Like show me how to pull money out these markets on a repeated basis, like. Well, not a daily, because it just don't work like that.
That's why I wait for a bullish market and then start teaching. How many times
you could teach with crypto right now?
Times I'm gonna be right. Yeah, for real. Like it's about to be a whole lot of trading books about crypto after this bullish run, niggas. But like, how long am I gonna be wrong in front of my students when I'm telling them to buy right here?
Yeah.
I'm gonna look good in a bullish market.
How you trade crypto though? You need to have your stop loss needs to be much longer than your take profit. That's what I say, because just never know. And it's like you don't need no 2-to-1s. Just get the move. Just get whatever the move is given. Hop in. See, you only get 2-to-1s if you at the very beginning of a move or higher. You can't expect to, catch a 4-hour confirmation and think you're gonna get a 2-to-1. Like, because everybody can see that, and so many people it ain't gonna happen instantly. Like y'all was saying, it's gonna have to bounce up and down a couple times because you got so many people aiming for a 1-to-1, right? So they gonna cash out.
Is there any market that you can pull up that somewhat mimics Bitcoin? Like any
Not
market.
that not that I seen. No charts like fucking go high straight up like that, fall straight down and come back straight up. I ain't never seen no shit like that. At this rate, like if you look at it, when it was reaching new all time highs, shorter and shorter in between. If you really go study it,
About to pull up the monthly.
yeah, like it was reaching. It hit that high, pulled back, went right back. You can see it right there. You can see two of them. The two that I'm talking about. The two times that it really happened. Yep, right there. It pulled back, came right back higher than the second. Then that was a major pullback. That was COVID. And it made that V, came all the way back, surpassed that level, and then made a smaller pullback than it did that time. And now we at where we at now. Like, nah, you ain't gonna see no chart like this. Like it just don't happen. It just didn't happen. Bitcoin's like the most growth over a 10-year period than any other asset.
Yeah, dog. Look at this. It's a 10-year chart right here. 2015 to 2025. What's the growth from $252 to now? What kind of growth percentage is that?
What happened?
I said, what's the growth percentage from $300 to $81,000?
Thousands percent.
Tens of thousands.
Yeah.
Can you figure that out? Do you know an easy way to figure out that math?
No. AI. I mean, you can. You just dividing it. 10,000% is a 10x. I mean, no, 1,000% is 10x. 10,000 is 100x. So from fucking 300 to 30,000, that was 10,000% right there.
300 to that's Google.
Like I said, I know it had the highest year over year over a 10-year period than any other asset in history. Oil, the stock markets, gold, anything.
26,900%.
Mm-hmm. Wait, 26,000. So that's two and a half, almost three times. Yeah. I don't fuck.
381,000
Oh, so it's more like 30,000%.
in
Let me
years.
see.
And it's not done yet because we didn't hit, because that number is from December 2014. So January 2015. So that would be January 2025. We would get the final result. It's gonna be crazy. But yeah, so 2015 to this growth. Is there anything mimicking that? 2021 down, 2022 down, April, November. 2021 April and 2021 November. So I had two down turn periods in the same year, two highs in the same year, and a sell off. Let's see what the SPY did. Just a sell off. See what the bonds did. Not following that. Just one down year. So not following that. Just one down year. Just one down year. So none of that is following that. Maybe the dollar exchange. Nope. All over the place. Euro. Nope. 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 Gold. Down in 2020, down in 2022. Some similarities, but not quite.
Yeah, at one point they was looking alike. It was correlating, but now
Not quite. But that's the closest I could say would be gold.
yeah, it's digital gold.
Right.
You know, it made that
2020 run up. Then another exponential growth from November 2022. 2019, 2020 run up, and 2022. Oh, yeah, it's but it's kind of like gold.
yeah, that's the closest, but it outdid gold by so much,
Yeah, yeah.
so fast. That's the thing. Like gold just reaching its all-time highs and shit. It was the speed and the amount of growth that makes it unmatched. Like,
Right.
yeah, speed and growth. It wasn't just like a lot of growth slowly. Nah, it was a lot of growth fast and continually. Like nothing ever. Only thing that was close was that tulip boom. The tulips and shit. Look that up. When the tulip was worth like 18,000 or some shit.
Right. Yeah, you're right about that. They had crazy percentage growth in the thousands on that tulip growth period. Let's see if I can overlay.
I don't think the gold rush was even this fucking big. You know, when Trump's granddaddy was selling pussy. And and they got an escort service and a gold rush. Them boys really been. See, that's that old money. Just imagine, you know, you was around the gold rush, your family selling pussy, yeah, and y'all rich off that. Now here come 100 years later. Now that same family, the president of the like, that's old money. That's how old money works. You know, that's how old money works.
At the end of the day, keep that shit in the family.
Mm-hmm.
I thought you could overlay on this hoe.
What?
Like put the gold charts over another chart. Like
No, that's the premium, my boy. No, it's
and
the basic.
one, they don't let you get one.
Fuck those.
Damn, come on, TradingView, give me
It's
one.
only $15 for the base. They must have dropped it because I thought it could have sworn it was 20. Yeah, I'm getting that tomorrow. I'm going back because I definitely want to be watching the charts less. It's like right now without alerts, you can watch the charts less, but you're gonna miss most shit. So I don't want that. I want to watch the charts less and not miss much. So yep. And I decided too from looking at the markets, I'm probably gonna always be a scalper to a degree.
And you gotta know, bro, in these markets.
Huh?
I said you gotta know yourself. Like, what's gonna make you happy?
What
What's gonna make you
I'm
pleased?
gonna tell you this: Aristotle, he do all three. He do swing trading, scalping, and he do buy and hold long term.
Right.
And that makes sense. He got three different accounts, and that makes sense. That's the best way.
Yep.
Like,
I agree.
you know, because that's the best way, bro. It's just simple as that. Mathematically, risk management wise, it's just the best way.
I mean, it'll help you out too, especially. I mean, if you're looking at your long term trades, if you long,
You could see, yeah, you could see the overall play.
you've been up, for the past 3 months, then
Mm-hmm.
kind of
You're less likely to take shorts. You're only gonna look for the buy and the dip
exactly,
opportunity.
exactly. If you
I
got,
say though, at one point I was just doing that. I was taking just sales, just buys. Not long. I wish I would have went longer, but it helps. Like if you really know, like the less is more for real.
right,
Like if you just looking for buys,
right,
well, you only should be in bullish market. If you in bullish markets only looking for buys, bro, that take away so much noise.
yep.
Like it take away so much noise. You know, if you even a bear just looking for selling at highs and shit,
I mean,
or you know,
yeah, even if you a bear in a bullish market, you still know what you're looking for. You looking for that.
right,
You
the
only
highs,
for what they call it, counter trend trades.
yeah, pullbacks and shit, yeah, looking for retracements, quick little retracements. Uh-huh. Sell at that high, retrace to a low support, and take profit right there.
Right. And when those trades are not working out, then you could go to your other account and go long on your buy and hold position.
Right. Or just go to, just because you gotta realize when we look at the market, we really only you can look at the month charts all you want, but all you're gonna see is today.
Right.
You see what I'm saying? You can't see no further. You can't see tomorrow. Is the point. So zooming out and zooming in really ain't gonna make no difference. You still seeing same price action.
Yeah, even if you got 5 minute up next to it.
It's the same price action. Prices at the same spot, and they move the same amount of units per minute, per 5 minute, 15 hour, 4 hour, 8 hour, 1 week, It's the same thing. They all show the same thing.
Right,
It just look different.
right.
But you know, if you trying to look for buys and sales, and that's come on now. Now you then created another alternative, basically. Like for your mind, mathematics, you got all this. Yeah,
Another scenario to shake you out of the market.
exactly. Exactly. But I was looking at the market reverse is too fucking quick. And it's like I much rather but see if you're gonna be scalping, you really have to know you have to have your numbers right. You have to really know how much you want out the week and you gotta stop once you get it. Type shit. Like if you just in there just trying to scalp every little opportunity, you're gonna burn yourself out mentally. And if not your fucking account, you know. And if you're gonna scalp, you definitely should just scalp with the trend. I would suggest definitely go one sided on scalping. You know, just wait. But the point I was getting at, we just gotta wait. You gotta wait. Whether you enter from the month chart or the day, you still gotta wait. I looked at my average trade. My average trade like 5 hours and 30 minutes, 8 hours, some shit like that.
Yeah.
5 to 8 hours. So I'm like, fuck. I might as well look at the 4 hours and shit like that at that rate. But that was over my whole account time span. Um, and yeah, I definitely need some kind of journal, bro. That FX books ain't it. Like it's not. It just ain't it. You know. I need to be able to clearly see all my trades for the week. I'm so mad that fucking Oanda took that shit off. Like, who's like the fuck? Like that was the dumbest move ever. That's the only bad thing they ever did. Why would you take off analytics and stats and shit? They don't want you to get better. But goddamn, at least make it a paid version or something. Like sell it to me for $5 a month or something.
Right.
You know, they could have did that because I feel them. They don't want use all that data and not get paid for it. Only thing they really get is fucking you know, the deposit fee and shit, the withdrawal fee.
Yeah. At the end of the day, that's all in that for is fees.
Yep. So they probably because you know all that data, starting that shit for and then especially for day traders making all them fucking trades. That's why on TradingView I got to connect them with Oanda. They like we only can see 15 trades per day per pair. You got to request more than that. That's what it say every time I pull a chart up. I'm like, damn. God damn this! I'm up 74 pips on UJ. Now see, now watch this bitch go to turning around. I mean, that's why I'm about to get out. Look, I got a big red candle. I'm watching the 5 minute now. I'm getting the fuck out. You know what? I'm about to get out right now. Fuck this.
Yeah, I'm about to say that's a lot. UJ on Sunday, 74 pips.
Sundays is my best day. A lot like that sound crazy, but my numbers already prove. And I got 72 on GJ. So dollar must be going up. Let's see. And you see how I'm set up. So only pairs I'm trading is ones that's influenced by the dollar. I just got that GJ. That's the only one, and that's because of the speed. That's because of the speed. And I like the pound be gaining a lot of strength sometimes against the yen. So I'm like, you know, this the one pair that ain't so heavily influenced by the dollar, but let's see. It's going slightly bullish. It's coming out. It came out that consolidation. It was consolidating since 12 o'clock. Last week. You see that?
On what?
DXY. It went into consolidation Friday at 1 p.m. and it just stayed in that. Now it's breaking out of that area. That's why if y'all ain't eight, huh?
What time frame you looking
The hour. You can see it on the 15 too, even better. Where it looked more like a up, down, up, like a W. But on the hour, you see,
You talking
yeah,
about?
they kind of
You talking about
it's
the
breaking.
consolidation that just kind of broke out of? Or
Yeah,
is currently trying to break out of right
right.
now?
Right. So that's pushing, you know, AU down. I'm pretty sure. I took that bitch off my. Yep, I backed off it. I ain't fucking with it. I just ain't because my stats just every stat I have say don't trade AU. For me personally, like I lost too much money. My win percentage is low as fuck. Like damn, the 30% of my losses all time came from some shit.
Yeah.
Like there's nothing good. Like you know, I know that's most of my old trading, but still, you know, even you know, last week I didn't. It's not for me. That's really a pair that's not for me. Like literally, bro. I tried. It's not for me.
That's the good thing about Forex. You can reevaluate your data and see what is working for you or not. You know,
Mm-hmm.
but it's good to have that data because when you in
That's
the
why I'm like, fuck Oanda for that. Not fuck him,
you
but
don't know what
goddamn.
the heck you're doing. Because when you in the mix of trading, you don't know how good or not you're doing unless if you really review
You
your own.
could feel it. Yeah, you could feel it. You
You
know, if you on
see it in
the
your
street.
equity, but
Huh?
I say you can see it in your equity size of that.
Right. But you don't know the percentage. You don't know the percentage right off though.
All what days you trade bet on or what hours
Right,
you trade,
right,
like all that.
right. Or with pairs,
What pair? Yep.
you know. And how long do you usually hold? Is it, you know,
Right.
because my shit said I'm a swing trader for sure. I should have, from the looks of it, it looked like I was looking at the day charts and at least the 4 hour, hour, 4 hour. But really, I be fucking with the. Oh yeah, I fuck with the hour the most. But I made a few. I done made entries off the 5 and the 15 as well. The stops would be tighter though, and I think that's why I went wrong. When people say don't go to the small time frames, the reason why they say that is because of the stop losses. It's great for entries. Nobody ain't never say don't zoom in for a better entry. So
Right.
that people, so it's good for entries, but not for stops. That's
Don't try to make a decision off of structure and
5 minutes.
off of 5 minutes.
Yeah, exactly. You
Yeah.
should definitely take that bitch to the 4 hour.
Right.
Like skip the hour and all that.
Right. I
Just
agree.
skip it. That's something I've been learning.
And
But
AU
it's great for entries though. Like I swear, like you could never find better entries than that fucking 5.
you heard me?
Huh?
I said AU
AU what?
fighting the dollar.
Breaking up. I gotta see. It's dropping.
It's not dropping.
Oh,
I thought it was about to have a bearish engulfing, but we got 7 minutes left on the 1 hour, and it's starting to push back up.
that's because the dollar must be coming back down now. Yeah, like I said, it kind of rejected that area. It started rejecting. That's why I got out.
Yeah.
Yeah, it went bearish. That's why. See, these candles so sensitive. You really got to look at the 1 minute. Yeah, it turned into a sell on the 1 minute. It crossed below the 10 EMA. So now it's in a sell trending. It's not in the sell zone, but it's trending. Currently, it's bearish, but it looked like it's just gonna pull back to 105.07. EMA on 100 on the 1 minute. Quick little pullback. What goes up must come down.
Thanks.
It's just what
It's all about, when the people say, the markets trend or they consolidate, it's really all about, what time frame you're looking at. Like of course, if you look at air or any instrument on the market, and you go on a weekly and monthly and go out far enough, or you looking at years, of course, typically it's gonna look like it's going in that one direction. For the most part, probably up or down, depending on which you're looking at. But nobody really trades off the monthly. You want to, you look at the inner workings of each day, and you will see trends within that move. You'll see bearish trend, bullish trend, validation. You see all kind of shit.
ebb and flow.
You'll never see a market going directly up on a 1 hour, 4 hour. Like it has its moments where it pulls back and trends bearish, trends bullish. But if you look at the weekly and the monthly, then you start to see that overall move that is doing within that bullish and bearish trend that it's having on the daily or the 4 hour.
Mm-hmm.
Know how far
Yeah, you really just zooming in and out, like literally.
yeah.
And what I've been noticing, paying attention to, like those that you talking about, like people would be like, "Oh, it pulled back this many units or whatever." But I look at how long did it pull back? You see, how long? Oh no, that was a 4 hour pullback. You see, so
Right.
when you look at it like that, it don't matter what time frame you can still correlate. You see what I'm saying? Because
Yeah.
if you look at 4 hour, you're gonna see a big ass red candle or blue, whatever the pullback is.
Right.
Default it's red. But and then if you look at but on the 15 minute, you'll just see a bunch of it look like it's a sell off.
Right.
You know, um, but that's 4 hours still. You're gonna see every 4 of them. So 4 times 4, you're gonna see 16 red candles.
Right.
So is it the candles? Or is it the units? Is it went from this price to that price, or is it
But
the time? Nah, it
necessarily
was selling off for 4 hours before
on
it
a
started to
4
turn
hour
back around.
basis, On 4 hour, it is selling off for that one candle, but on the 15 minute and them 16 candles, you possibly not gonna see 16 red candles. You will see a few green, with
But you'll see lower lows though. You're gonna see lower lows.
you're gonna see structure within that 1 4 hour candle on the 15 minute for sure.
Right.
Yeah, very structured.
It's gonna be lower lows and lower highs. See,
Right.
the color don't matter. That's another thing too. I was kind of like iffy on it last week, but as I'm looking at it, really don't. it's the high low close.
Yep.
The open don't even matter as much. It's the close.
Right.
It's the high, the low, the close. If it's usually not at the high or the low. The close is usually somewhere in the middle, because that's just how things work. All right. So that high and that low of that candle, that's what I'm looking at. I could give a fuck about the body, even the size. That's just telling me more stuff, but it's not as important as how high did it go up, how low did it go down over this time period. Like I could look at the month chart and just look at 1 month candle, you see, and that's all I need. I got my extreme points now. I'm either gonna buy at that high low, or it's gonna be my take profit at the high low, or stop loss. It's just that simple. Now, how far am I 60% closer to the high or 60% closer to the low? That's gonna tell me what direction I should get in and for how long. Basically, am I going with the trend? The overall trend, or am I going with the temporary the temporary trend? See, the temporary trend is the pullback. The market trends, and then because the pullback don't mean down. A pullback could be going up. That's a pullback too. Retracement is the word.
Right.
Is retracing. That's what retracing from his overall direction. Because why? Because you have two reasons. If the market is rallying, all of the sellers, once it hit that major high, the seller's gonna get out. When they hit that previous high, the seller's gonna get out, and there's buyers that's gonna come in. That's what they gonna meet each other. The sellers who stop loss getting hit, and those buyers who like, oh, prices just broke a new high. They're gonna meet and they're gonna exchange, and that's what's gonna push the market up even more. That's market psychology. That's what's really happening when we seeing on the candles, the high and the low. That's all that means. It means the high means nobody else wanted to buy at that price. It was too high for them to buy. So people entering the market got less because they like, this is too expensive. I'm gonna see what's gonna happen first. And then the people who was in on the buy, once it hit this new high, they're gonna take profit. So you have people, basically you have buyers selling at this point, and then you have buyers who could be buyers or sellers who's not doing anything. So basically you just got sales coming in. You might have some people who want to sell. You'll have sellers coming in who want to sell at that high, right? Counter trend traders. They looking for sales around that high.
But the market makers know that, especially if they got their stop loss at that previous extreme high, thinking it's gonna break out. If they gonna sell from there, they go push through it to stop them.
Right. That's literally where the bull and bear trap comes in. That's exactly what that is. Being that they know that people are gonna come in at these highs and lows, they're gonna make that high seem like, oh, the high got more high to go. So what that does is that brings in the people who sitting on the sideline waiting to buy, who missed the rally, who like, who have to make the decision. Should I wait to, like with Bitcoin right now? You got to make a decision. Should I wait to pull back and re-enter, or should I enter from the current price? Most people, if smart money ain't entering that current price, regardless.
Yeah, they already been there.
You know, you know. So, right, they already been there. So even the smart retailers, but some of them do. People like, I don't want to miss it. See, that's that FOMO.
Right.
And so they
That's
might make some
yeah.
money because if the market maker continue to push it up, depending on how long they in there, right? We don't know. Like with Nas last week, that shit just kept going. So like you was like, nope, I'm not gonna get in because I think it's fake. But then that bitch keep going and keep going and keep going. And somebody was on the opposite side of that selling and saying, oh, this I'm gonna just keep pushing my stop loss back. Or I ain't gonna get out yet. Or I ain't gonna hit this stop loss because this a monthly stop loss. It's not about to hit that. But you see the shit just keep going and going, keep constantly breaking new highs. See, when I see that shit happen twice, that's enough for me. When I see a lower low or a higher high than the last swing, that's enough. That's all I need to see for that market. You see what I'm saying?
Right.
That's telling you what it's trying to do. And we trade what we see, right? I see this market trying to push higher. Fuck the color and fuck what price is at right now. It's between these high and this low. That's always what price at, or it's added. It's either within so much percentage from the high or the low, or it's actually at the high or low. And that's the as soon as you enter the market or you start to look at your charts, that's the decision you gotta. What you gotta see. Okay, is this shit near high or near low, or is it near the middle, which we drew right? That swing high, swing low, and that middle point. That's my style now. And the shit works. So if it's at the low in a bull trend, of course you want to buy. If it's at the low in a bear trend, you might want to wait to see if it's going to continue going bearish. And when you see that, then you buy, then you sell. If it's at the top and it's in a bull trend, you might want to wait for the continuation, wait for it to break through. If it's in a bear trend at the top, you want to sell. This shit really easy, bro.
It's all about patience, man. Waiting for that shit to happen.
Yeah, you don't have to wait though. Technically, you bait sometimes. Like if you just using one time frame, well, yeah, you're gonna have to wait. But if you say I want to get in this market as soon as possible, well, you go to in this a rally. You go to whatever chart is. You go to the just 15-minute and see wait till it start to pull back and see where that support at, and you wait for it to come down, which still gonna take some patience, but it's gonna take the shortest amount. If you on the 4 hour the day chart, that's a whole different type of patience. Like it might be weeks before you get a signal. Like
Right.
real shit. Like real shit. That's why people don't trade it. Because they just, it just take too long. You might never get a fucking signal, and that's true. Well, you gonna get one, but it might really be months. I saw something like my setup, the 100 EMA. I'm looking at it for the 4 hour. Man, I can tell you one thing. Like that, when your setup on the 4 hour, oh, you better take it because you never know when you'll get another one. Whatever your setup is, right? If you see that bitch on the 4 hour or the day,
Right.
fuck,
Yeah.
I don't care if it was a bullish, a sell off, whatever the fuck. If you see your setup on the day chart, you better take that motherfucker and
Nah,
put your stop loss as far as you can.
real talk. Because you right about that. You might not get one for a long time. So don't sleep on the higher
And the
time.
thing is, you of course you're not gonna feel great about it. Like DP said, when it's time to buy, you ain't gonna want to.
Facts.
You ain't gonna want to buy.
Facts.
When that bitch, when it look high, it's in rallying. But what you're not looking at, it just broke the 100 on the month chart. It looked like it's oversold and shit on the other one, but it just crossed over the month chart. It looked like you buying high as fuck, and you are if you looking at just that. But what you don't know, over the next 6 months, this bitch about to go to, you see what I'm saying?
Right.
All time highs. So you can't just use basic psychology. You really gotta know what you're doing. Like, what is this trade really doing? What is this trade saying? You know, when you put in one trade, that shit means a lot. Like, you connected to the whole world now. Like, for real. You just put your money out into the world, the dollar, or against it. You going with the dollar or against the dollar, with the yen or against the yen. That's some major shit to be. If you really think about it, you know what I'm saying? You know all of the things that make these currencies possible each and every hour of the day. All of the shit that happens to push a currency up or down. So you got to really understand, what are you saying? So when I think about it like that, I always want to be long on the dollar. Of course, when the dollar is dipping and when the dollar is looking bearish, that's when I want to be the most bullish. It's just that fucking simple. But will it feel good? Nope. But going back to taking them setups on a higher time frame, that was the whole point. It's not gonna look good on the day when they cross over, because it might pull back the next day. You see, you get a setup and your setup don't play out right away, especially the high. Look at the
Yeah.
smaller time frames.
Yeah. Yeah.
You can see on the smaller time frame, even then, as soon as you get the setup, that next candle don't always go in your favor.
Right.
It be 3, 4 candles sometimes, and
Right.
then they go in your favor. You know, but it's never just the next candle. Usually, sometimes it is. That's a great setup, but usually
And typically,
second, third candle.
you'll typically find most of those great setups that happen instantly in like high volume markets, like in the morning.
Right.
That's when you go find
Right.
tools where
You
you
gotta have volume.
work out instantly.
Right, and really, we can't we can't see that. If you could only see the charts, now that's what I want. I want to only see the charts. I pay for that during certain hours of the day, and then make it look like a gap up or a gap down. I'll take that. You see, but I only want to see, let's say, 8 to 11 or 7 to 11 a.m. I want to see my pair only at that time, because that's really the only fucking time that matter, right? When we back testing and shit, you remember you was back testing. You ain't really care about the London session as much. Like, do you really put emphasis on that if you're not even trading it and the volume is less? You know what I'm saying? So that's what we can't see, and that's why you're right with price action, pure price action. No indicators and none of that, because the indicators, I don't know what lagging mean. People say they lag. I don't really know what that means. Like, but I know one thing: it's putting in not false. It's putting in useless information, so that makes the number not as accurate.
Right.
Because I don't care about the times when I'm asleep and the times that I don't trade when there's no volume. I only care about high volume times. You see what I'm saying? Like, if you measure basically when you're dealing with averages, you want to actually measure. You want to take in the high outlets and shit. The the shit that happens most commonly.
Right.
That's what you want to measure, not the shit. You know, you're an engineer, so you know how when you mix and sound, the lows. If you mixing the lows is like that's the lower frequencies. You turn up the lower frequencies. The highs, they don't even matter with you. Like with the EQ, I'm saying, right? Like
Right.
the lows over here. Only when you move this only affect the lows.
Right.
You can move these over there, it ain't gonna do shit. We dealing with the low, it ain't gonna do shit because that's high frequency shit. You see, so you clip that off, right? You don't even use that part. And then it's the opposite when you EQing your high frequency. You cutting off the low frequencies
Yep.
because you don't need it. You see,
Don't
so
need it, don't want it.
don't need it, don't want it. It's useless
Exactly.
to what you trying to do.
Right. It's gonna make your vision too cloudy.
Exactly, you adding static, you know. And that's literally, as far as audio, right? That's the opposite. You literally eliminating static and trying to get clarity. You know, how nigga compare trading to anything.
Anything, boy.
For real. Nigga compare that shit to mixing. Fucking equalizer, sound equal. But nah, this shit is scientific. Shit scientific. Oh, bro, I'm up 100 pips on GJ from that entry, from buying at that swing low, waiting on the confirmation, bullish. This shit easy, man. This shit easy. This shit just about risk management. Once you got a basic setup, that's the most basic setup. Everybody know what a swing low is. You wait for a bullish. You just wait for that bitch to break out or whatever. Just wait for some kind of bullish signal. It could be a crossover. It could be a bullish candle. It could be a breakout of structure. Enter right there after that swing low, especially if it's on the lower side of the market.
Nigga, you know Binance. This shit Binance. This is BTC and Ethereum options.
Yeah. No, guess what? Fucking crypto doing it too. Crypto got options right now. They got options like temporary.
Yeah, I seen it.
But yeah, I ain't fucking with that shit right now. They seen Robinhood having all this success. Huh?
I said people are up on that shit right now.
Yeah, I'm trying to do puts though. They don't give you no money for the puts.
Yeah. And whoever put on that whole lost like a bitch.
Whoever put on what?
If they bet on Bitcoin to go down.
Oh, yeah.
We lost like a motherfucker. Especially with the November 24th expiry.
You know which one I'm gonna get into? I think I like futures. I think I'm gonna start fucking with futures.
Yeah, I was looking at futures for Bitcoin too, trying to see where they because is futures like you on the expiry in the future that happen?
Futures, you must. So basically, you must lose or you must get paid. That's what's going to happen, with futures.
Right.
With options, they expire. They expire. Futures do too. I think futures is just further out, so it's like nobody really knows. But the closer it get, the more it get over your price, the more you gonna get when that date come. You know. Yeah. It keeps the market. It provides liquidity for the markets. That's the purpose of futures. You see, that's how people know. Like if you got a half a trillion in futures of Bitcoin at 80,000. You see what I'm saying?
Right.
You could see that. You could see the futures and derivatives and shit. That's what that is, a derivative. You can see where people buying at and where the target's at. And that's how you know at least what the market thinks the market going to do. And that's that could also tell you if you should buy or sell. When you see more sellers when you see, people more selling.
Each contract on Bitcoin on futures is 5 Bitcoins.
Oh.
The Bitcoin futures on the CME currently have expirations that extend as far as March 2026.
My goodness. That is crazy.
Right.
And all you got to do is see what most of the volume at and just go right there. Follow the money, you know? If niggas really, like how much people is really betting on that 100K, they shit just went up in value, you see? They shit just went up a lot of money.
Right. That's what I'm saying. As far as for options, I know I'm buying that. It started in July. And their first expiry for that July was none other than November 2024. Because why? Election. That was the first expiry. So niggas are happy right now. Whoever hitting them expires.
And the company happy too, because they about to get a bunch of more crack addicts.
Nah, real talk.
And they caught him at the perfect time.
Real
That's now they hooked. Now niggas about to lose hundreds of thousands on that same platform. Because they gonna do it again and that shit gonna tank. Because Bitcoin does it definitely pulls the fuck back after highs. You look at the chart, we just saw it. So that's what I'm waiting on. I will catch that bitch and sell. I like the I ain't gonna lie, I like the short Bitcoin after highs. I never catch it, but I will one time. I'm gonna catch that. I know more now. Like I'm better with swing highs and lows and shit now. I actually look at that. I wasn't looking at that shit before. I was just the recent high.
Kind of
No,
what it looked like when it sold out last time.
what it look like?
Yeah, that's how you could kind of judge like what the candles look.
Yeah. But remember though, they get tighter. Like so, this one probably gonna sell off quick and then come back up quicker. Because if you look at that pattern, they've been getting tighter and tighter between the sell off and the continuation. So you know, I would be watching it weekly. I would look at the weekly highs and lows and keep eye for that, not the monthly.
Yeah.
You know what I'm saying? Type shit. Because you just never know. But yeah, targets is within a week. That's why I say I'm always gonna scalp because it's all about when the extreme prices happen. Like I'm trying to get in and out. Like I could see it now. I know if a price is extreme now. Looking at the long term swing highs and lows. I know. You know. Like I asked you how you know if a price is high or low based off just candles. And the answer is shit. The highs and lows. You know. Fuck.
Previous highs and lows, and when it's
Yeah.
none in sight, like currently, like Bitcoin, you ain't got no previous high.
Even it don't even have to necessarily have to be the previous because like you said, if you're looking at the month chart, that might be all that might be printed right on that one candle. The high, the low, that might be a fucking $8,000 range. That's none but trade plays right there. Just be in that 1 month. Like you said, now you zoom in that and just see. Mark
Right.
that up on it. All you really gotta do, this how you kill the whole high time frame, low time frame argument. Just mark it up on the high time frame. That way when you're on the low time frame, you can see exact price. That's
Exactly.
the best way to do it. That's the best way. I was thinking about making an indicator, a movement average that do that. Like I want to see the 100 moving average on the fit on from the day chart. I mean, like say from the 4 hour on the hour type shit. You see what I'm saying? I want to see what that is type shit. But they don't have no indicator that do that or whatever. You know, but shit like that. So, but if you just mark it up, that's all you got to do. Put in a rectangle, put in a white line, you know, a trend line, horizontal, and just say and put the text on it. Just the 4 hour high. If you're looking at the 15 minute, you know,
They don't have that though.
huh?
That would be kind of dope to invent. Like, put that
No, you could easily make that. Like you could easily make it.
overlay EMA over your chart that
Somebody probably made it on TradingView. I just never looked.
is static to another time frame. So whatever time frame you're currently on, this EMA is only gonna show for the daily. So if you're on a 5 minute, it's still gonna lock in that that EMA up from the daily on your
I
day.
think it do that when it show the I don't know if it means it's gonna show that same time frame or it's only gonna show it on that time frame. But
Yeah,
they got a little option for that.
right.
But I don't know because I never mess with that. The visibility.
Right, yeah, I messed with it before. It is based on that time frame, like what you want to see when you on that time frame type shit.
Right. Yeah, that's what I figured.
Yeah, this I don't know, man. This Bitcoin shit is crazy.
People want to see it at 100K for sure. Before then, it's gonna cool off between 50 and 80K. But they got to hit that 100. People, that's what the market wants it. The futures. we got to start looking at that shit too, because that's just more technical analysis. Or is that fundamentals? That's fundamentals. That's looking at peer.
Yeah.
This how many people got orders in that for this price. So that's fundamentals. That ain't got nothing to do with charts.
Like I got it on my charts right now. This is this CME group, and they're talking about this like the futures calendar for Bitcoin. But
Can you zoom it? What it's saying? So what that first one say? Product code. We say November, and then it say product code.
first day traded June, last day traded. So I guess that's the expiry for that, November 29th.
So each month got an expiration.
Yeah,
Each
but
month expired.
I don't know why it's jumping to 2023 on this home. Well, it got a settlement. All these got settlements. December 2nd this year, December 30th.
Well, cause it's more than it's having 2 years on it. I can't really
Yeah, it's
say.
2 different years. Like, well, this one the same year. This 2 different years. 2 different years.
Oh, because it might be the end of, June is halfway through the year. So yeah, that's 6 month contracts. Look like. Is it?
That shit.
Yeah, that's about 6 months at a time. Right? Yeah, it looked like exactly 6 months.
June to November,
That's
January.
6 to 11.
This
That's
is
that's
this
one.
for that's 24 months. January 2023 to December 2024.
Oh no, look, so the symbol, the code, that tell you the year that it expired. So BTC and they say 24, they tell you the expiration date. That's the letters. The letters they call
So
it.
the settlement date is the expiration date. You see the settlement category? This is the expiration. See, 2024
Yeah.
the 2nd, the 30th, the 3rd, the 3rd, the 31st, 28th. I don't read it was crisis.
Oh, I gotta get my charger. Hold up. But yeah, we need to look into that and see them expiration dates for sure. That's gonna definitely move price.
This is the information. Prior day open interest totals, estimate volume totals, trade day on Friday, month of November, open, the high, the low, the last, the change, settle, prior day open interest. I don't know, it look like all these hoes in profit.
Yeah. You definitely gotta look into that more and understand. Um I'm gonna holler at chat tonight.
Yeah.
Uh, you know, ask the right questions.
Number 6. Open interest is high as shit on futures.
What that mean?
I guess that's like it's just showing like I guess open interest of all the traders that's interested in the market of the futures at that time.
I
And
guess almost like volume. Yeah.
yeah, it was extremely high. I mean, the volume of these bars, so you see the volume is the highest on the 6th. That was when we got the news for the most.
Open interest is the line.
Yeah,
Open interest probably mean like the amount that you could actually make.
so
Whatever it is that month, it touched it. It was there and it touched it. I don't know. We ain't no futures traders.
nah.
Forex technical analysis, mostly, and fundamental.
Let's see what is
100 pips. GJ got
okay.
in at 197.33. Right now, price is at 198.31. Just that easy, folks. I'm up 100,000 now.
Open interest in Bitcoin futures represents the total number of outstanding contracts that have not been settled or closed. So that's the current open amount of contracts that have been settled or closed. So it indicates the level of market activity and liquidity in these future markets. High open interest typically means strong investor interest and higher liquidity, making it easier for traders to enter and exit positions.
All right. Hold on, let me the sound messed up. I'm gonna leave and come back. But I want to finish on that. But it's not whatever month that is where it touched it.
That was November 6th.
Oh, recently, days ago.
That was for the election. That was that election volume.
So that's when the liquidity got tighter, because that's when people was cashing out, and
People was getting and cashing out. It was just a lot of volume.
Right. It was the equivalent. It was at its max. It was at the max, as you can see. Like, because the amount of interest, pretty much there was no shares left outstanding. Like, shit was open. It was at open interest, you could say. It wasn't high. Yeah. This is a good way to learn analysis too, from just looking at it from election and seeing what goes up.
It said high open interest typically suggests strong investors. It typically suggests strong investor interest and higher liquidity, making it easier for traders to enter and exit positions. Conversely, low open interest might signal reduced activity or market uncertainty.
Mm-hmm. So, like I said, the market was very certain and active. As high as certain and active as it can be, in fact, based off the open interest.
Right. And it shows that with high liquidity and volume is
basically exactly.
You got somebody that can sell. You got somebody you could sell your trade to in open interest. When the open interest is high, that's when you want to, look to either get in or get out, because it's more liquid then.
Well, the open interest is only high or low compared to the volume, it looks like. At least that's what this chart is showing.
Yeah, that's what it's saying.
So like when it's away, that's when it's more liquid. When it's closer to it, it's less liquid.
Right.
But that's where it all happens. Like we said, this is where buyers and sellers are meeting. Basically, contracts are expiring and people getting new ones.
Yep.
And
everybody want to buy the $80,000 contract to go higher, since they saw what it did from 70,000.
Right.
They don't want to be left out.
FOMO. But some of them smart bears, some people see the bearish ones will work more right now. You see, and that's how these. So that's what's the thing. How is market price on these contracts in different market situations? You see, that's what I think is a key thing. Because when the contract is about to expire, it's a different price than when it is not about to expire.
Right.
So that's a key thing to really, I think, to zero in on. And you're gonna have a best situation and a worst situation. You want to keep yourself out that worst situation. And I guess that's mine short term. But those short terms can go up. Like they work the most. So it's always gonna be the less probable, the higher the payout. The more probable, the lower the payout. That's what it always is with these markets. So it's like you got to take risks to make money, or else you kind of like putting your money at risk for low return. Kind of like a sports betting with the Chiefs and shit. The money line, like that shit, always negative 3, 4, 5, 600. You gotta put up 600 just to make 100 when you bet money line for the Chiefs.
Right.
But I think Patrick Mahomes might be out or something tomorrow. Wait, that was today.
Yeah, they play today. I don't know if they won or not.
Let me see, because I heard he was out.
Yeah, and then gotta watch some videos on Future. I'm asking ChatGPT some questions, but it's even the answers is kind of like scratching my head.
Right.
They
Because it ain't no shit that you could just do this and make money. Because like I said, the higher the probability or whatever it is, the higher probability of that shit, like Bitcoin hitting the futures at 81,000. Like they probably ain't even selling that.
Yeah.
You see what I'm saying? They probably got that shit. The next thing is probably fucking 90,000
Right.
or 100,000. Go on there and see. Shit, see if you can see with the price or some shit in real time.
I tried to find it, ain't showing that shit.
Because you got to probably get on an actual account and shit, and
Yeah.
a market, a broker. CMG, you got to get on that shit.
I'm on it. I'm on it right now.
CME. Yeah, I'm looking at it.
Settlement on future settlements, but it ain't showing like. Well, I mean, it's showing prices, but I don't understand what that means. Like it's showing open, high, low, last, but this November 24th. So I'm guessing it's showing for the monthly. But then it got December, January, all under the current price. Like the current price at 80, they showing these high, low opens at 79, 77. Like it's past all that. So is all these profitable? That's what I'm saying. All these trades.
Hell yeah, they're profitable.
Yeah.
So look up how you buy a future contract.
Let me see.
Or how do you make money with a future? How do you buy one, first of all?
They gonna say go to CME. You already know I ChatGPT. They gonna give you a whole layer. All right, get your computer, get your car. How to buy BTC futures. The following steps. Of course, they're gonna break it all the way down. Use a platform. CME Group offers standard Bitcoin futures and micro Bitcoin futures. Cryptocurrency exchange platforms like Binance, FTX, and Bybit offer BTC futures with various leverage options. I was trading Bitcoin futures on I think it was what the fuck that name?
KuCoin.
Yep, Q coin. There you go, Q fucking coin. I was trading. I didn't know what the fuck I was doing, but I was buying it when it was going up and shorting it when it's going down. But it mimicked the way they had the platform. It mimicked just regular Forex, kind of similar a lot as far as with the numbers of buying and everything. But
yeah, just the payout and when you get paid be different. All of these things is the same. The terminology be different.
Place
That's
your
about it.
choose a type of future, standard or micro, and expiration date that fits your strategy. Place an order, decide on a long position or a short position. Input the number of contract, decide leverage. Place a market or limit order to execute the trade. Monitor and manage, settle or roll over. You can close your position before expiry or let it settle into cash or Bitcoin, depending on the contract. Notes, margin leverage, yada yada yada. So how do you make money buying a future contract? Smashing that shit.
Huh?
I said you smashing that. Huh?
What?
It sounded like you was eating something.
Oh no, I ain't eating. That was a rapper. I ain't eat it yet. It's still closed. I was moving that bit.
Buying a Bitcoin future confused price speculation or arbitrage. Here's how. Speculative trading going along. You believe Bitcoin price will rise, you can buy a future contract. When the contract price increase, you can sell it at a higher profit. Buying a BTC futures contract at 30,000, if BTC rises to 35, you sell your contract, making a $5,000 profit minus the fees. Hedging. Futures can be used to lock in the price for Bitcoin if you expect to receive or pay in Bitcoin later. This protects you from unfavorable price movements. Arbitrage. Cash and carry. If future trades at a premium to the spot price, you can buy Bitcoin in the spot market and simultaneously sell futures. At expiry, you deliver the Bitcoin for a profit equal to the premium minus cost. Okay. Yeah, that was a mouthful.
It's the same shit basically.
Yeah.
It's just what are they fees, and like how much do they actually pay? That's the question. But
Yeah.
I mean,
Yeah, it's the same shit. Futures, options, like you said, overall, you are
when that shit go up, you get like and the shit went up 1%.
you
They
can
gonna pay you for whatever they pay for a 1% increase,
right.
or make the right trade. Basically, and go back to technical analysis
That's
and
why
some fundamentals.
Forex traders will be way better stock traders and futures traders than current traders are.
Well, see, that's the thing. That's why people use futures, because it's cheaper to get in than stocks, too, and also for hedging. That's what I realized. That's the two main things. Because, like you say, stocks, with stocks, you got to put in thousands of fucking dollars. You know,
Right.
hundreds just for one share.
Right.
So that's why derivatives was made, so you can make more money using leverage, basically, to
But overall, the reason why all these shit, because before we didn't have futures and shit, it was just regular stock trading and shit. Then
yeah.
came along and then options, but all that futures was first, and then options came. But options came more so as a gamble because the brokers saw an opportunity to make a shitload of money by letting these niggas trade on and speculate on the market by trading options and shit. And a lot of people can, like you said, it's a cheaper entry into trading the markets with options and shit, but you're not getting the full ownership. You'll never get the full ownership of the stock. You just paying for that 100 share package in the form of a strike price. Because what I thought it was, and it goes by your expiration and how far you going out. will deliver the premium that you're gonna pay, times 100. Because I thought it was solely the stock price times 100. That's options, but that ain't the case. And especially if you get a long enough out expiry date, you even get a better price on that trade. Well, actually, the premium goes up because it's more of a sure that you're going to make money on that trade. So the premium goes up when you push the expiration out further. Yeah, we've been in this range. It's a little 5-minute little range we've been in when the market opened. Sunday, right about here on that gap. That's what we started at. Yep.
Yeah. Money. So, what you were saying? You were saying, what the options came in that? You saying brokers saw an opportunity to do what?
To make a shitload of money off of fees, because they knew a lot of traders was gonna have a easier entry to speculate on the markets versus just coming in, with futures when you had to have like 25, 30 bands. You could be like, well, shit. And with these options, you could get in a little cheaper to control a whole lot of shares, and you just make money, based on expiration if it goes up or down.
No, I don't think futures is more expensive though. I think it's about the same price from what I picked up. But the thing is, to go along with what you were saying, that expirations is sooner with options.
Yeah, you could do week expirations. I think futures are kind of tied into like monthly and quarterly, I think.
Yeah, and years.
Right.
Right. Yeah, a certain amount of quarters probably.
Let's see. When did futures start and why?
It's really betting. Oh, like you said, for hedging too, because if you think about it, you got a stop loss at 70,000, and you got a futures contract at 70,000. Boom, perfect hedge.
The futures contracts date back to the 17th century Japan, where they were used.
God damn.
One of the earliest commodities. However, the modern future markets began in 1848 with the establishment of the Chicago Board of Trade.
Damn.
The goal was to address issues faced by grain producers and buyers, such as price volatility and delivery uncertainties. So they said why futures were created: price hedging, to protect producers and consumers from adverse price movements. For instance, a farmer could lock in a price for their crop months before harvest. Speculation and liquidity. Traders could speculate on price movements, providing liquidity and more accurate pricing in the markets. Yep.
Hedging.
Facts.
Something else that nobody ain't gonna never teach you about, because only pros do that.
It said evolution. Over time, futures expanded beyond agriculture products. So it was all based around agriculture and farmers and crops.
Yeah, because that was the number one resource and still is. Commodities, basically. That's still to this day what's traded. Commodities.
And financial instruments, metals and energy. That's what they expanded.
Mm-hmm. Yep, commodities.
Exchange introduced financial futures in 1972. So that's when financial futures came out from the Chicago Mercantile Exchange. And then Bitcoin futures were first launched in December 2017 on CME and CBOE, providing a way for institutional investors to gain exposure to Bitcoin without holding the asset itself.
Yep. And it's another way for them motherfuckers to make money, and that's when they started buying up Bitcoin, because they like, we got protection if this shit do drop. We gonna get paid either way, and that's why institutions hold at least 8% of Bitcoin. Last time I checked, probably about 10% now, which is a shitload. That's 100 billion at least. Well, it's 2 trillion, so that's 200 billion. 10%.
It said options trading has an ancient origins, but became formalized in modern financial markets in the 1970s. A brief history. Ancient Greece, 4th century BC, the philosopher Thales and Miletus, sound like a damn parade for Mardi Gras, is credited with using primitive options to secure the rights to olive presses and anticipating a profitable harvest. Dutch tulip mania, 1630s, traders used options to speculate on tulip prices, an early example of using derivatives in speculating trading. So in 73, that's when it started for us. It started on the Chicago Board of Exchange. This marketed the introduction of standardized exchange-traded options, provided transparency and liquidity. And it was created because hedging options allow investors to protect against unfavorable prices movements in assets they own or plan to buy. Speculation, traders can profit from price fluctuation with less capital than directly owning the underlying asset. And income generation strategies like selling covered calls can generate income from assets held. So they damn near the same.
Yeah, they're the same, just the expiration. Like the options, they could sell or they could not sell. With future, they have to. That's literally the only difference.
What's the main difference between?
Now that one I looked up about 3-4 times, so I can tell you that one. Definitely do it again. Might discover something else.
Let's see what it said. I remember you saying this. We talked about it. The main difference between options and futures lies in the obligations they impose and the flexibility they offer. Here's a breakdown. Obligation versus right. Futures. Both parties, buyer and seller, are obligated to buy or sell the underlying assets at the agreed upon price on the contract expiration. Options. The buyer of an option has the right, but not the obligation to buy. Call options or sell put options, the underlying asset at specific price, before or on the expiration date. The seller is obligated to fulfill the contract if the buyer exercises the option. So this is stupid protected for the buyer. Futures carry unlimited risk. This is for risk for both parties since they're obligated to complete the trade, regardless how much the market moves.
Yep.
Options. The risk for the buyer is limited to the premium paid for the option, while the seller can face significant risk if the market moves unfavorably.
Say that again.
Said on options for risk. The risk for the buyer is limited to the premium paid for the option, while the seller can face significant risk if the market moves unfavorably.
Right.
So the
Cause
buyer,
ain't nobody gonna want to buy that shit. If it goes up, if the market going up and you got sales in, ain't
yeah,
nobody buying that shit no time soon.
yeah, yeah,
People don't even want to sell. They don't want to sell. Period. So why would they buy a sell for a price way down there too?
yeah, that's
Then
hurt.
you see what I'm saying? It's just like I told you when I did on that demo. I went into a drawdown for 2 years because I ain't want to take that little cut that trade.
Flexibility since buyers can't choose to
But I did that just to see what would happen if I broke my rules. What's the work? And yeah, your ass go in the drawdown. That's what happened. That's
flex.
what drawdown is. When you break your own fucking rule.
For use cases, futures commonly used for hedging against price changes, i.e., commodities, currencies, or speculative trading. Options use cases is used for hedging, speculative trading with limited risk, and strategies like income generation through covered calls. Yeah, that income generation through covered calls is something to look into. They mentioned that shit twice.
Yeah. I saw somebody break that down.
Futures are binding contracts for futures. Options give the choice to execute trade.
A call. I don't know. A call is like you buying it, but a call is buying it. I don't know what covered means. Shit. I forgot.
Which is more profitable of options future. The profitability of options versus futures depend on your trading goals, risk tolerance, and market conditions. Both instruments offer opportunities for profit, but their characteristics make them suitable for different strategies. Profit potential. Futures profits are unlimited as they are directly tied to the price movements of the underlying assets. Both gains and losses can be substantial because futures contracts require the full performance of the contract at expiration or cash settlement.
That's the one that's more profitable.
Profit potential can also be high, especially with significant price movements in the underlying assets. However, profits are reduced by the initial premium paid for the option. The risk for the buyer is limited to the premium, making it less capital intensive, but potentially less profitable if the asset doesn't move significantly. That's true, because the further you move out the expiration on options, the higher your premium is, because it has more time for that trade to end up profitable, or for you to expire while it is profitable. So that's
And that's that bullshit I'm talking about. And so from just looking at it, that's how the brokers make their money. And why? They charging you higher premium on something that's more probable.
exactly.
So
They know they're gonna pay you out for sure. So let me get that money up
well,
front.
they don't even know that because that might not happen. But
Why not?
you
Well,
still got the risk. You paying a premium
it's
and you
not
might lose.
that the expiry is out for it to be profitable. It's the fact that you have more time to sell it at a profit because your expiry is out further enough.
But the market, if the market moving against your ass, that time ain't gonna mean shit. So
True, but if your time is out 10 months, then the market could be against
it
you.
could do anything. It could go anything. So
But
they
when
shouldn't charge you more for that.
when you got 10 months in your favor, the market could go against you for 5 months and go back in profit them 6, 7 months, and then you could get out in a profit.
Or it could go against you 12 months.
True, that is true. And you just have to sell hopefully sooner than the whole 12 months.
And take a even more loss. And
Um,
yeah, so but basically from looking at it, I would probably choose futures over options.
let's say
And
risk now they're talking about risk and leverage for futures, higher risk due to the obligation to buy or sell the underlying assets. Leverage can apply both profits and losses, leading to a significant gains or margin calls in adverse situations. That's for futures. For options, lower risk for buyers as the maximum loss is limited to the premium paid.
yeah, whatever you paid. That's
That,
why I say your stop loss is up front, pretty
right.
much.
Leverage still applies, but with limited downside risk for buyers. However, sellers of options, i.e., naked calls or puts, can face significant risk.
So watch them. Because you know
A
the market
lot of significant risk for selling put.
because you know the market don't like bears. The
Facts.
stock market hate bears and it fucks up liquidity. You know, and because that's the reason why they gotta have all this liquidity for bears to
Right.
keep that shit from fucking just crashing for real.
It said market scenarios. Trending market. Futures tend to be more profitable in strongly trending markets due to their direction correlation with price movements. For volatile markets, options offer greater flexibility, allowing traders to profit in various scenarios, rising, falling, or even sideways markets. So different strategies like spreads, straddles, or strangles. Through different strategies like spreads, straddles, or strangles.
Seems like options you got too much going on. And futures is just simple. It's like either this shit going up or it's going down. You know, what the future look like.
Next.
Options is too many options. I don't like options. This is how we were just talking about. You want to be a bull or a bear. You want bullish markets, bearish markets. You know what I'm saying? You like, what kind of seller are you? You should. It's probably best to
It
just
said
choose one.
strategy for futures. Hedging and strategy for futures. More straightforward and used for hedging against price risk in commodities, currencies, or financial instruments. That's for futures.
Simple. Okay, it's really hedging. Okay.
Complex strategies that can generate income, hedge existing positions, or profit from market volatility with limited downside. So yeah, futures seem the more safer, straightforward buy and sell type of hedge. Options is just way more options, way more things you can do.
That's why it got so many. They had to. That's why they call it that. Options. That's too. No, you know. That's
Yeah,
too. I mean,
yeah.
with that, it seemed like you got to have it. You got to really know what strategy. It's not bad. It just you have to. It could a lot. You have to have a strategy with that and understand what's going on and understand what's the underlying asset that you're investing into. So you should definitely know its highs and lows, trend bull and bear markets on the higher time, the higher, on the long term, you know. But I would say just look for calls instead of puts because all markets want to go up essentially. So if they and then it's more risk.
Dollar.
Uh, huh?
Now I just got a signal on the DXY.
Dollar what dropping?
No, I didn't get a signal on the DXY. I set a signal. I thought it went off. My bad. It says active. By AJ. It's from November 8th. Okay. Yeah. My bad. I thought I heard something. Maybe that was your phone or some shit.
It's all good. I got an AJ buy at 116 pips away. An order. I'm looking at it now. I ain't even know. Oh, I forgot.
So this is I asked ChatGPT, how do you perform income generation through covered calls? It said income generation through covered calls involve a strategy where an investor holds a long position in an asset. So you just hold in that position, no future option, just a regular position.
Right.
Bitcoin stocks or ETFs, and simultaneously sells a call option on the same asset.
Mm.
This strategy generates income from the premium received for selling the call option, but it also limits the upside potential of the underlying asset if the price rises above the price of the
So
option.
I see. Yeah. So it's like basically if you buying Apple and you sell a call position and you buy a covered call, meaning it's like you selling something that you have. Well, you wait, a covered call.
It
What
said
is a covered
it's
call?
doing it step by step. It's saying first,
Okay.
own the underlying assets. The first requirement is that you must own the underlying asset. For example, you might own 100 shares of stock or 1 Bitcoin. This is the covered part of the covered call, meaning you already have the asset on hand. Step 2, sell a call option. You sell or write a call option on the asset. The call option gives the buyer the right, but not the obligation, to buy the underlying asset that you already have at a specific price, strike price, within a defined period, expiration date. In return for selling the option, you receive the premium, the price for the option. This premium is your income from the strategy.
Oh, I see now. So when the person who's selling the calls, so you could buy a call or sell a call.
Yeah, and
When
when
you selling a call,
you
you get the premium.
that
When you
boss.
buy a call, you pay the premium.
Yeah.
Okay.
Yeah. Oh, yeah. Okay. It do make sense. It just hit me. So you sell a car, you get the premium. You buy the car, you buy a car,
You
you
pay the premium. Because I thought the premium was going to the broker.
nah. It's going. It's yeah. Okay.
Yeah, it's going to whoever is selling it.
It makes sense.
So what's
And
who determines who get to sell a call and buy a call?
it
Like
said
how do you
after that is you choose the strike price and expiration date. The strike price should be set at a level above the current price of the underlying asset, giving you room for capital gains if the price rises. The expiration date defines how long the buyer has to exercise the option. Shorter expiration dates can provide more frequent premium income, but the options are less likely to be exercised, while longer expirations might yield higher premiums but have more risk assignment, more risk of assignment.
Mm-hmm.
Outcomes of the trade. If the asset price stays below the strike price, the option expires worthless and you keep the premium income. You can then repeat the process selling more call options. If the asset price rises above the strike price, option will likely be exercised and you must sell the asset at the strike price. However, you still keep the premium income, and the asset's price increase up to the strike price is your profit. Oh my God. Damn. So if it go against you, the option is worthless, but you keep the premium income. And if it goes in your favor, you keep the premium income plus the strike price increase. It said example, underlying asset, 100 shares of a stock. Current stock price, $100. Strike price of call, 110. premium received for the call, $5 per share. If the stock price remains below 110, you keep the $5 premium per share and you can sell another call option when the current one expires. If the stock price rises above 110, you'll sell your shares at 110, but you keep the $5 premium. So you're effectively selling price at 115 per share. Damn, boy. Disadvantages. Let's just look at that. Limited upside potential. If the asset prices rise above the strike price, you miss on further gains.
So it's all about your strike price.
Yes. And the premiums that you're going to get. What's going to be, is it worth it enough to capture that premiums and lose on the upside potential?
Right.
The potential higher tax liabilities. The premiums earned are typically taxed as short-term capital gains. Be a disadvantage if held.
So you might want to set them bitches out fall.
No, it said it can be a disadvantage if held for a long time.
What? If what's held?
It said the premiums are earned typically taxed as a short-term capital gains, which can typically be a disadvantage if held for a long time. So if you holding these cover call options for a long as expiry, you know, I guess.
Well, because the payout gonna be bigger. You're gonna get more premiums.
Yeah, which means a bigger tax.
Yeah. Read that. They work better in a bullish market.
Market conditions. Cover calls work best in stable or moderately bullish markets. So not extreme bullish markets.
Right. Because you don't want it to, because you're going to miss out on too much upside.
Facts. Strike price selection. A higher strike price offers less premium income but more upside potential, while a lower strike price offers more income but less room for price appreciation.
Nah, this shit too much. I'd rather just get a big ass lot size on, on some 500 leverage shit. Because really and truly, that's what makes the shit all the same. Like, it's unlimited lot size, man. Like, if this shit go up, I'm getting paid real time. I ain't got to worry about no cover this and cover that. I could just hedge or trade. It's like, it's not like you making that much more or even more at all. Like, the same amount that you making, it seemed like you could get that out the market. It's the same. You just got to have more capital, or being on a high leverage account,
Well, yeah, I would say that too. It probably hit different when you had a larger account, like when you're playing with millions. That might be,
or even tens of thousands. Oh, you talking about options?
Or doing all those, that cover called income strategy.
Yeah, when you hedging, like they said, you got to actually own that. That's for people who actually got shares in it, and you know what I'm saying already. Because like they said, it only because you already it's going up anyway.
Right.
So if you sell an option, you basically selling something that you still have that you're gonna keep. You see, so that's why it's the income. Even they say off the premiums, you making money off the premiums, basically.
Yeah, that's what it is. You making off the premium, not the stock price.
Right.
Yeah. Because you don't really care about that in a sense. You caring
about coverage because you
you cover because you already own it.
Right. That's the only reason why your ass covered. Other than that, ain't nobody protected from the market because they adjust price. They adjust everything based on probability. So that's what makes shit so hard to predict because they got that shit paying the same amount. I think Forex is the best pay. It's the most fairest pay of anything. You see, like that's fair pay. You know what I'm saying? You press one button, I press the other button. One of us gonna get paid. That's you see what I'm saying?
Depending on when we exit, because both of us could get paid.
Yeah.
And, in a ranging scenario, we both bought in the middle.
Yeah. Yep. Yep.
You go down, I take out. When it go up, you take out. We both got paid.
In the range, yep, that's how you do.
Yeah, that's true. Yeah, I agree. I agree. I mean, I do find it fascinating, but
you just got to spread.
Yeah.
That's all you got to worry about with Forex. If it's going up, you getting paid per, per percentage. PIP is price and percentage. So, yeah. Yep.
Yeah, I think futures probably would be a real good thing to tap into with the kind of more of a safety net, if you will.
Yeah, hedging. Like if you go long on crypto and you got a future, futures you have to buy.
Yeah, you obligated to buy it at whatever price you set it out at the future.
So it has to go up, basically.
Well, no, you
sell futures.
It's at $50. I want to be obligated. I want to buy it in the future, but I want to lock in this price. So I'm gonna lock in $50. If it go up to 70, then I'm obligated to buy it, and then I could sell it. I could sell that contract because its worth is currently at 70.
No, that's options. I'm thinking futures is like how you said, if you want it at 50, you have to buy it at that price whenever it's at that price in the future. So whether it go up to 70, up to 100, it got to come back down to 50. Then you obligated to buy it.
Nah, I thought it was more like you obligated to buy it
at whatever price. So whatever price you select, that's what I'm saying. The price, can the price be above or below market price?
The agreed upon price of the contract's expiration date, not the strike price.
Oh, okay.
So if I agree
that it's gonna be higher or lower than this price.
Yeah. I think that's how. Because it's saying both parties, buyer and seller, are obligated to buy or sell the underlying asset at the agreed upon price on the contract's
right. Because it's like, okay,
the agreed upon price on the expiration date. So whenever this contract expires, whatever
the price is gonna be higher or lower, and then the difference between how high or low is the difference that you're gonna make or pay.
Exactly.
Have to pay.
Exactly.
So it's like, okay, I want to sell. Well, okay, so it's not about the price. Basically, it's just about the date and the price.
No, it's about the price, but it's
both. It's equally about both.
Yeah,
that's what it is.
But you have to wait until
you can't say, well, I won't buy Bitcoin at 100,000. That's more like options or some shit. Puts and call, like that's. I guess that's what that is. That's a call to 100,000.
Right, and you could exercise that right anytime. Like with the futures, you locked into that expiration date.
Yeah, I think options is good if you want to go long on something. If you see something got like a on a monthly time frame or weekly, you see like a bullish some shit on a weekly, monthly time frame. I think that's when that's good. You take that option, it's just gonna pay you out more. And you only could lose whatever you do, whatever the premium you pay. You see,
you're gonna pay the highest premium though.
Why?
Because you got it far out. That's why futures are better for longer term.
Well, no, I'm not. You got it far out. Far as what, the date? Oh, okay.
Yeah, the longer out you put options,
but it still won't matter though. You still gonna get paid. That's the thing, because you already see the bullish potential. So like that market going up. Like buying a call option, like after like something like Tesla when it's been dipping and when it's at a monthly low.
Mhm.
Hell yeah, you're gonna buy that just out to the month though, not like the year. And I wouldn't fuck with those. You know, that's like that's a long term play. That's what Wall Street Trapper doing shit like that. Like that's how he get his money.
Leap option.
Yeah, leap. I like taking a leap long term. And he buying a lot of them. And yeah, them shits be high as hell. It should be like 20,000, 50,000 to buy them shits. But he buying some shit like Amazon or Walmart or you know. So not Walmart, but Tesla and shit stocks that's performing. That's
Right.
that's that guy. He a fundamentalist, and he see when they got good news and shit long term, then that's when that's when he buy, and he just hold it because he can. He got enough money to do that, and so as the price go up and get closer and closer to that, so you looking at price and date. Price can hit that price way before the date, so that's gonna make it work more, way more, because yeah, I don't know, but it just seemed like too much. Like I thought Forex was complicated.
No, hey, and yet I thought you had to hold it, but you can sell a futures contract before expiration. I thought you had to
You
hold.
just probably no. You have to. You have
You
to.
have to pay the agreed price.
Right.
Yeah.
If you're gonna do that, then you just gonna lose the money. That's all. That's all they saying. When you say okay, I'm locked in, they pretty much they must put that money in escrow, or you have to pay.
Contract. It said if you hold a futures contract either long or short, you can sell it to close your position at any time before the expiration. This is called offsetting the contract.
Mm-hmm. You
If
breaching.
you originally bought a futures contract, you can sell an identical contract to close your position, and the difference between the entry and exit prices is your profit or loss.
Right.
Yeah. So similarly, if you were
So
short
yeah,
on
if it go above your shit before the time, you could sell it and take profit.
right, so it almost be like what's
You look, it's time and price. They equally. You gotta. That's the thing. It's not just price. It's time and price.
but can't you buy, like if you buy in a futures contracts and you sell it if it go up for profit, and then the same thing you doing in options, buying it if it go up, or selling it for profit if it go up in your favor?
Yeah.
It's like, what's the main difference? I mean, I know the obligation part, but it's like,
Well, see the thing with options, you have to pay that price. I mean, with futures, I'm sorry, with futures, you have to pay that price, whatever price you locked in at. But so now, if it hits that price before the time, well, that's not a problem paying that price. You see, because you still got time. You could sit and wait it out, or you could take the little profit you have right now. But essentially, you paying that price early. That's all that. That's what that is. But you paying that price. Now with options, when that shit expire. If you don't sell it for profit on when you selling, I mean, like, yeah, when they expire. Now we just looking to the cover calls. That shit kind of fucking. But when they expire
right,
on options. You just taking that loss. Now covered, you selling premiums and shit like that. So I don't really know how that works, but so whether you sell it before or you try to hold on to it to see if it's gonna hit your price, pretty much on what options you losing, you lost if that shit expire. If you don't sell it before it expire, you lost. With future, it's kind of the opposite. you kind of wait until the shit until it expired to cash out. You see?
Yeah.
But you all with both of them, you always gonna have the obligation to a right to get out them shits early.
That's what I'm saying. Like I could see if futures didn't allow you to get out early, then it would be like, okay, that's a big difference
But
between.
the price that you pay to get out and when you could get out and how, that's the difference. You see?
But
One of them gonna be more expensive to get out early, and that's probably futures.
So basically saying that options is more expensive to get in because they got these premiums.
It's more expensive to get in because you could get out more easily and quicker without fees. When futures, they're gonna charge your ass to get in, to get out. They're gonna charge you more to get out, even probably higher than those premiums, relatively. Because with the whole idea with future, you supposed to hold it until that date. So it's not something that you want. The market ain't set up to get in and get out. It's called futures. Just look at the name, the future. So they want you to stay in so you could determine. That's because if everybody got out, then that market wouldn't be as liquid. It wouldn't even make sense. It wouldn't have a purpose. They wanted to lock in your money so they could know at this date we have this much liquidity. You see what I'm saying?
Right,
So
right,
you kind of fucking that up by getting out early. So they gotta charge you. So
right.
what they ain't gotta charge you, they just saying, well, you want to get out early? Well, just pay whatever you said because we need that liquidity. We already got the MAC factored in. Because that's the whole purpose of these things is liquidity pools against hedging. And they to prevent crashing, man.
Now, when you said about the liquidity, it made it hit harder because I don't think options were created for liquidity. It was mostly hedging, but the futures was kind of created to manage that liquidity and that volatility that they was experiencing.
Options is for liquidity too, but it's more short term and they got more things going on. Options, you see?
Yeah.
They basically the same, but options has more options. That's it. You have more options. Futures, it's purely liquidity. They this is like they say, race to kind of stabilize the market with the rice grain and stuff like that. Now, options is more for like you see they start saying speculation and shit like that. You could just bet. You basically betting. When they say speculation, you just betting. You just betting and hoping.
That's all that.
Yeah, and you can make money from that because if you look at price history, you can see okay, well this shit do go up and down any given day. Like it could go up 5% any given day. So that alone is enough for you to accept the risk of it going down 5%. You just betting it to go up 5% instead of down 5%. That's all. You like $1 million, that's 50K. I could make that today. So options is more like a money hustle. Futures is more like long term, protecting long term investments and just having a long term investment. Options is more like trading.
It's more of it's the obligation
Short-term.
between that seller and buyer. That's the difference I'm saying, because I just asked ChatGPT. I'm still seeing a similarity in the two, and they kind of broke it down a little bit better. I mean, the same way, but it just not that we was breaking it down. It's just is that like how you said that binding commitment with futures that you have to obligated to buy at that.
Because you got to realize these are contracts.
Right,
Actually, I know contract law real well.
right.
So these are contracts you breaching basically. They got to charge you the cost of breaching.
And it's favored for both parties, buyers and the sellers. On options, it's
Right,
more favor for the buyer than the seller.
right.
The seller is obligated to sell to the buyer if he wants to exercise that unobligated right to buy or sell his bought option.
Basically, so yeah, when you sell it, a nigga could get it from you or not get it from you. But so the thing about it, you on daytime, kind of like where I used to stop. I stopped selling. I stopped selling smoke because niggas think you on daytime. They want you to come when they want you to come.
Like real commerce, like you could open up a store right now and have the best deals, but they go just keep walking past your store and be like, never buy, never buy, never buy. Like you gotta wait for them. You know,
right.
They got the obligation to
basically because you making an offer. Put it like that.
Government saying like if you pass this store 30 days in a row, you obligated to buy on the 31st day if you ain't buying that.
Yeah, only so with contract you got an offer and then an acceptance. You know, the contractor and the contractee.
Right.
You the options, you are making an offer. You like, hey, I'll sell you Apple at $3 higher than what it is when they hit it. If it go up $3 higher, I'll sell it to you. You know, and you could go get it because I'm expecting it to go up to 106. So once it go to 103, you could buy from me from 103, and then you could ride it to 106. I really think it's gonna go to 110. So you could sell it at when you get it 106, you sell it to somebody at 109. You see what I'm saying? That's speculation, and that's all that shit is.
Nah,
just like I'm gonna give you a perfect example. Remember when Bitcoin first came out, and you had to go to you had to buy from a person, like peer to peer.
Yeah.
That's what that is.
Yeah.
That's what it is.
And that's that open interest. Remember when there's a lot of open interest in the market? Right. Yeah.
Because what would make a person sell it and what would make a person buy it? Think about that.
Well, I would sell it if I see other people selling it, just like I would buy it if I see other people buying it.
But so how is it that people see the same thing? How can a person see the opposite thing at the same time, should I say?
Like what would make me sell it and make somebody else buy it?
In the same day, yeah. Or same hour.
Well, the person that owns it, that wants to sell it, is thinking along the lines of it's going up and it's possibly going to an area where it's going to have a struggle to keep going up. So let me sell. While the person that's not in the market, that don't have no money that's being made, they like, ooh, it's going up. Let me get it before it get to a previous high so I can ride the wave.
Right, take the difference.
Yeah, so that's what now that
or wait, let me add on to that. That's okay. Right. So and should I say, and somebody who just been holding that shit for so long that they made so much money. That's really the people who really selling, if you think about it. Who been in, who take profit. You see what I'm saying? Who then tripled at this take profit at this level? You see what I'm saying? I'm not selling it because it's going up and I think it's going to keep going up and because of resistance. I'm selling it because I hit my target a long time ago. You see what I'm saying?
Yeah, I mean that could be said
like somebody who bought Bitcoin at 10K. Right now they at 80K. They 8 times up. They ain't selling because they like, oh, it's so close to 100K. Let me get out. They like, all right, 8 times is enough. You know what I'm saying? And that's their main reason. They don't care about who gonna buy it. They really don't care. Really, the sellers don't. When you exit in the market, you don't really care about the buyers at all.
Well, you don't care because it's a liquid market.
I know.
You know somebody gonna buy it. That's why you don't.
Right. But in the beginning, you care trying to get rid of them Bitcoin. And in the real estate, they care a whole lot because it's not liquid, you see? Because you got to actually find an actual buyer.
And in banks and closing and all that shit is not as liquid.
Take a whole fucking month for one transaction.
If everything go right.
Right. Right. In a perfect world.
Nah, real talk. But yeah, you're right. It's that's because it's a liquid market. You know, everybody feel, and that's why, you know, some people go hold at 2x, 3x, 8. Some niggas waiting for 20x. Whoever would it, that's not the matter. But I know as far as when people look at the markets and look at charts, because we all look at charts, most people are going to sell or look for an option to sell when the market has reached a previous high, because it's expected one have a breakout and
Not
go
necessarily. Not
higher.
the people. When you said Bitcoin was at what price 2 years ago?
2 years ago,
When you just said how the price difference and how crazy that it was at that price just a year or two ago. 20,000 or some shit. 13,000. Huh?
15,000.
15,000. So what about the people who was buying and holding at 15 and say, I don't care once it go to 20, 30, 50, 60, 70. I'm holding. They got people who doing that. And you can look at the wallets and see.
But if you pull up Bitcoin, my explanation was pointing the simple fact that if you look at Bitcoin, and you got to pull up like the weekly, because I'm talking about from 20, what was that? If you look at,
No, what you saying ain't wrong. Of course, people gonna, once it get to highs and shit. But I'm saying some people's strategy is literally buy and hold till they die, pass that shit to their children.
no,
Like
fact, of course.
that's
So
what buy and holders are on. Like,
and they not
and them long swing term traders, they are not cashing out positions like that because essentially they're
forecast
not
meets these areas when it got to a previous high.
right.
Well, the sellers came into the market when they
But
came.
look what happened this time. Look when they did it this time. Keep going forward to that area. Go back to that area where them highs. Go forward
Okay.
to
Yeah.
right there. Boom. It didn't happen. Nobody didn't cash out
Yes,
for
it did.
real.
What was that? Cash out. That's all cashing out. What you
But
think?
that's they just cashing out small positions. Ultimately,
But
it didn't go. But listen, look, it didn't go below that level for real.
my
So
thing, why that didn't happen right here? It happened right here for a significant reason, because that was the old previous high.
no,
You know,
I know that's just a pullback. That's small. They not cashing out their whole positions. They just taking some profit. And then you got a larger group of people who that's just bears coming in trying to catch the market real quick and catch a short little move. Look how the market really didn't dip below that level too much. If you really look at it, like look how many candles is below it and look how many is above it.
look at been ranging this whole time. It was in a range until it finally broke out.
Well, that's what I'm saying. A range is consolidate. That's accumulation, basically.
Exactly.
We call it a range, but what that is people. That's the banks building up positions.
Right.
They pushing it up and down.
It was buying it here, as you can see. You know, this all hindsight, but
And when they go up on its own, they take profit and they sell, and so they cashing out, and that pulls it right back down. They keep doing it. That they the ones who be making the money in the range,
right.
and then so once they finally ready, after they took profit, right, going up and down, up and down, up and down, they done made hella billions right there, hella millions, right, and now with all that money that I'd accumulated, right, from taking it up, down, and cashing out both sides, right, how we just was saying. Now I'm gonna put all of that in this buy area, and now I'm about to shoot the market up because I got hella positions. You see,
Yep.
that's market psychology from the
And
smart money perspective.
And you're going to do it primarily around the election time when you go get that extra retail volume. That's going
Wherever you could get value, exactly.
to get a story. Now you got a story created around it. Like, oh, the market went up because of the truth be told.
It becomes self-fulfilling.
When the whales want to keep buying, they could raise the Bitcoin market up. It don't need no news. Like, it don't need no election news. No, it's the people controlling this shit.
Exactly. For the most part, you got the whales.
I mean, granted, the people I'm talking about are like billionaires and multimillionaires.
Right.
It ain't average Joes, but it's still
individuals compared to corporations.
Exactly. That's what I mean.
And I could take that. I could take that because they putting their money at risk, their own personal money. So yeah, let it. They deserve to be a whale and a market maker. You know, that's they risking their own personal shit. You know, like George Soros, he risked his own fucking money accumulating all them sell positions. So he deserved the fucking profit when that shit really crashed. Like he put his own money up. You know, you
Yeah,
gotta respect that. He put skin in the game. You
no.
can't say shit about somebody who got more money, skin in the game than you.
Because if it would have went the other way, we would have been talking about a different documentary.
Right. How
Like
the man who lost the most money in one fucking week.
he would be the worst retail trader in history. You wouldn't get that nigga
Right.
a mogul title. It's if a nigga you was a retail trader. He lost all that money.
Right. We wouldn't have never knew his name.
Nope.
You know, it's just like in football. You know, when you make that wild 4th-down play, the fake field goal, that shit is horrible every time until it works. It's always a bad decision until it works.
Nah, facts.
It's always a bad decision until it works. Even the fake kickoff, you know, the onside kick,
Yeah.
it's always bad until it works. So if you think about that with risk, they always gonna say it's not smart. But literally, like how we just the money is in the risk. You got to go look at the risk and see. Okay, out of all of the not smart decisions, what's probable? Not most probable, but which one do I believe in the most? Like you say, story. I'm gonna start using that more because I like that because that's how things move and that the human mind got a thing for stories. Which one is telling the story that I can relate to the most?
Yeah.
Which of these risks? Because that's what we doing. Buying, selling here, stop loss there. You know, you say something and it's either you right or you wrong. You know, the more sure, the less it's gonna pay. If you put your stop loss fucking 1,000 pips out, you know, you probably gonna use a small position. You have to even have the margin to cover that. So your position gonna be smaller. So that means when it's going in your favor, yeah, it's gonna be you're gonna be up 100 pips, but shit might just be $1 or two or whatever, depending on your account size. Because your account size is smaller because your risk is less risky. You got your stop loss 1,000 pips away, so you know it pays less basically. So the more probable, the less paid. That's just how everything works.
Right.
Let me see. I want to check the Chiefs and see. I know the people. Somebody listening to this, they like these niggas ain't watched the sports today. Niggas ain't watched the games. They don't know. Mahomes played with an injured leg and still came and blew them boys out. Cause he won. Always got a story with him. Watch it be some kind of story.
On these markets, man.
Look, they won.
By how much?
Look. Chiefs blocked last second Bronx field goal to remain perfect. See? I just called this. They won by 2 points. They was up by 2. It was 14-16. They blocked the field goal and won, bro.
That NFL cap, man. That shit not real. And what you call it, greed is gonna, like it does everything, greed is gonna expose the NFL, and they really getting out of hand. They showing their ass with the fucking, they showing their ass with all these betting sites that came into the play. Like they really going crazy with all that trickery shit. They gonna get exposed though. Them niggas gonna get exposed. That's gonna be probably the next big scandal. Like I'm gonna call it. Probably bigger than the stock market. It's gonna be the scandal on all the people who lost all their retirement on betting on football.
Yeah, that's funny. You said they be going in with all that trickery shit. Yeah, they showing that for
No,
real.
because it's getting too easy. It's for them. So they making all this money and shit.
Man, let me look at the odds. So that's the reason why I went to it, right? To look at the odds. So something like this, the best team in sports, their quarterback supposedly injured. They got a perfect record. You got to take all these into account. So let's look at these numbers because I know everybody was betting on them. But what I realized is too is the sports world, they need a team like that. They need somebody who they could rely on as well. You see, because they need stability as well. See, liquidity, right?
Right.
Who gonna provide the liquidity? Which team can they rely on? Because all they got to do is put that spread a little higher, or if they put that money line a lot higher. To get it, you see what I'm saying? Because
So you mean it's trying to entice people to bet on a sure bet?
well, they already know people gonna bet on the short bet, right? So how they get them is from messing with the payout and the spread
Right.
and the over under number, and also some people play the spread. See, the money line, they always win there. The people gonna win there, but what they do is, matter of fact, let me pull up the number. I'm cooking and shit, so I'm getting distracted. What they do is, so that's how they take advantage. It's,
I know you probably still on, but I can't hear you, brother. If you can hear me, I can't hear you. Yeah, you was cut off, man.
yeah, you get me?
I can hear you now.
Yeah, it's
Now I can't hear you no more. Mm, 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 mm. Yep.
yeah. That's because I was going to Yahoo. They don't like that app, I guess. They say stay your ass right here, nigga.
That so when you go out, when you leave off the screen and go to another app or something, it be doing all that shit. I guess it does. 'Cause you are out of there again. Steadied on Monday of the disappointing local government debt relief package from China snuffed out a nascent rally, leaving investors back to focus on the implication of Donald Trump return to the White House. Yup.
Yeah, I ain't do shit that time. I think my finger slid the screen or some shit. But I was saying with the Chiefs and shit, it's kind of like the turtle trade. They're gonna take all them losses and they're gonna come up big on that one. You see what I'm saying?
Yeah.
They're gonna let them niggas win all year and they gonna lose that one game. And that one game they lose is gonna be so much money betted on them that it makes sense. So the numbers today was so the underdogs covered the spread. It was -7, a +7. They played the Broncos. So a lot of people took that spread automatically. They like, oh, that's the Broncos. The Chiefs gonna beat the Broncos by 7. That's just a touchdown. You know. And they didn't. But the money line was -350. So you'd have had to put up 300 to make 100. So even though you see that little payout that they paying,
So that's how you tell how much you can make off the money line?
yeah, that's what when they say -350, that means you got to put up 350 to make 100. -110 means you got to put up 110 to make 100.
So if it's -50, then you gotta put up 50 to make 100?
Yeah, but you ain't gonna never see that. You ain't gonna never see less than. You ain't gonna even see -100 because that's the rig. The house went either way.
So that's why they put that 110.
Yep, because they gonna win either way.
Son of a bitch.
Yep. So even if like whether you lose or you win, they still got that extra 10, which come out to like 5% or some shit like that, some kind of percentage. But that's their edge. It's called the rig. This shit even called the rig. Ain't that fun? No, it's called the rig or the juice. But
Damn, boy, they saying analysts at Australia saying the Australian dollar could test 64.90 coming weeks.
going down.
Yeah.
I mean, look at it. They have no reason to buy on the time frames other than just expecting it to bounce off some lows. But that's not, like I said, it's a risk asset. It's go down all the time. You can't really find no real bull rally on that motherfucker on the month chart. You ain't gonna really find one.
And it don't give you the whole timeline of the market. I think on our charts it only go back as far as 2013, I think, or 20.
It's gonna go back to when the company started.
No, I'm talking about Australian dollar.
I know that's when Oanda started, when they started keeping their records.
Oh,
Yeah. Whenever they listed it as an instrument, should I say? Because these companies they keep their own. You see what I'm saying? They keep their own numbers.
said Chinese. What they said? China.
Yeah, it's looking bad for Asia, and I'm
$1.3 trillion debt plan for local governments, but provided no direct economic stimulus.
they about to start doing stimulus though. So that's why I'm long on the dollar and short on the yen because it's about to be all kind of stimulus. China and Japan they in financial trouble. They need stimulus and shit. So I'm telling you, you better long that dollar. I'm looking at the charts and I'm looking at the news. The news say China and Asia is in trouble. I'm telling you. And then Trump, everybody know America gonna be stronger under Trump. So go against it. This ain't the time to be buying AU. I'm telling you, go against the dollar right now because AUD is connected to China and Asia. So if they going down, people going back into the markets. Nobody ain't betting against the dollar right now. People going to the markets. They're gonna put that money in the stock market. Gold gonna just keep dropping and everything. against the dollar. Watch. Anybody see gold like no all-time highs and no Trump, and nothing associated with gold. That's AU. That's also the yen. It's not associated with gold, but it's associated with risk. Bitcoin too. That one, nobody don't know what the fuck to do about Bitcoin, but with that theme that I just said, for as risk assets going to be going down mostly. Bitcoin might be the only one that might not go down because it's just not correlating with nothing, or it correlated with everything at one point, and now it's just doing what the fuck it want to do. But Bitcoin aligned with Trump and Elon, you see, so
$80,000. Crazy.
Elon know who Satoshi is if he ain't him. That's all I know.
Satoshi, fuck around.
Huh?
I said that nigga probably a part of Satoshi.
That's what I'm saying.
And a Satoshi clique.
That's what I'm saying. If he know who he is, if he ain't him. No doubt about it. He too smart. And he been like that. I mean, he was in South Africa, but he come from money. He came from money. Mm-hmm. It's African American. African American history. They should put him in there. Elon.
Here. Yeah, I agree with you, man. Fucking dollar.
Yeah, it's about to make new highs.
Oh.
And you can see look at them lows right there. It did not go past them lows at no point. It's just bouncing and pulling back. You know, it kind of been in a tight range for real. Yeah, it's been in that range. Doing what? Accumulating, waiting on election. What's that start of it right there? 22? Exactly. Now watch what happened when they get to this top this time. That's gonna be what? The third touch?
Up here?
Yeah.
Yeah.
1, 2. Yeah, come on now. How many times you think it's gonna touch the top without breaking through? We gonna see. Cause if it come down, you know, that's a rectangle with the middle line.
Yeah.
Perfect.
I'm gonna put that bitch.
I think I already got one on mine. Yeah, I'm gonna hop off in a second. I'm about to go.
Yeah, put that up, man.
And my girl ready for work. She got to go to work late at night.
Damn, girl.
Yeah, she work at FedEx warehouse.
That's what's up. Well, yeah, man. It was
Nah, we could take it through the hour though.
we got 5 more minutes.
Gotta catch the candle close. You know what I'm saying? Real traders, stupid ass. Can't never go without letting that bit close. Ooh, my goodness.
Damn, hey, you need to make up his damn mind.
That's just a pullback. That's just a pullback in the that's a bearish pullback. It's just pulling back in the bear zone just to come right down. That bitch do need to make up his mind though. That's why I said fuck it. You.
That's why I got this little box right. I was like, what you about to do? You gonna break out? Or you gonna break out at?
Yeah, that's what I do in this range and this shit. And I just put orders at the top and the bottom. Simple. And then put the stop loss at the opposite side, man. But I learned to not do that no more. I'm not putting it just right there. I'm zoom out for my stop loss. I got a rule that I could never have a stop loss that's less than 1 day ATR ever again. I don't care where I enter from. It still got to be that much. So I just got to make my account size, match up the
Right.
unit size. But I was looking at some positions today, but I said, damn, do I really want to put a 400 pip stop loss? Oh, not right now. So it kept me out the market. Cause
That
now,
sound crazy.
huh?
I said that shit sound crazy. A 400 pip stop loss.
Oh no, that's all. That's my net. Let me show you my ones right now. That's what I do. Look at my GJ, 1,700 pips, bro. Stop loss, 3,200 take
What,
profit.
stop loss?
Yeah, that's some monthly chart shit. Hey, but that's a position that I'm gonna hold for a long time. But put it like this: that stop loss is equivalent to 1 or 2%, less than 3% of my account for sure. Probably 1%. Let me see.
So you got a trade on they got
1,700 pip stop loss. Yep.
that bitch ain't gonna ever get not only if it's never gonna get stopped out, but you ain't gonna let it get to negative 700 pips, let alone 1,700.
Exactly. So it's really just a gauge because if I see something too crazy, I'm getting out of there anyway.
Well,
So my whole thing is if I'm that's just a gauge. Like you said, I ain't even gonna let it get that far
but I
because by
perfect
that point,
world, but what perfect world would a 1,700 pip stop loss make sense if you know you're not even gonna let it get to
well,
7?
I don't know that for sure. What's most likely gonna happen is it's gonna keep getting pulled up every structure point. That's what's gonna happen on like the day chart. Like if I see a swing low on the day chart, then it start to go back up. Well, I'm probably gonna pull it, and that's the lowest swing low of the whole week. Pretty much on the last week chart, whatever the swing low is for the week, I'm gonna
Right.
pull my stop up to that. Pretty much. So that's really just so I can know
To show
my
you
position. That's just one position. What I'm gonna do once that get to another, I'm long. So once it goes to another bullish structure, I'm going to just add again, and that's and then I'm gonna pull that stop loss up on that one. But I'm gonna add another position that's tighter. But it's gonna keep me knowing, because you know how you'll take a good ass position and then you leave out the market, you don't even remember what you got in at, and the shit went back in your favor, and you like, damn, if I would have stayed in, and so I got small positions and I got bigger ones. Oh damn, this shit ain't even charged. Um,
Is the dollar dropping? Kind of, but not really.
yeah, but yeah, that's just showing me like the extreme level. You know what I'm saying?
Right.
Like you said, that's probably ain't gonna hit that, but that's worse coming to worse. And if it do, that's still only so much percentage of my account. So it sounds crazy, but that's 100 units too. You see, it's just 100 units. 1 o'clock. Let's see. We should get some movement.
Probably on some of them jacket pairs, huh?
Yeah, GJ shit. I'm looking at it. It was bearish on the last hour. They got a swing low form. This next hour, if it's the low stay lower, then that'll be a confirmation. See, that's what get me out. When I see that when I see my entry against me on the higher time frame, I'm getting out. You see what I'm saying?
You said when you see it, your entry against you.
Like I'm long, but I see a short entry that I would take forming on the same time on the, you know, on,
Okay.
so I'm like, that's an exit symbol. You see, like I just entered off a swing low. That's a swing high forming. I'm in profit, 70 pips already. So
Yeah.
it's like, huh?
I said EJ look good for sales. I ain't gonna lie. I'm looking
I,
real. I might hop into that bitch on the cool.
I don't know. EU euro is kind of strong right now because I've been selling against the dollar since November 8th, and it has not went profitable at all. So eating euro is pretty strong. I could tell you that. I've been in drawdown the whole time, pretty much. Small position too, but still. Um, I'm definitely waiting on price to either break,
Get into that.
huh?
I'm about to get into that shit. I'm gonna see what it do.
EJ,
Yeah, y'all that bearish engulfing too on the 1 hour.
right there.
Mhm.
Oh, yeah, the drop down some, yeah. I mean, against the yen, I mean, shit, maybe the yen strong right now. It did just give back 20 pips, so the yen going doing something. So, that definitely is a good set. Wait for that bitch to confirm though. That's gonna be an hour though, huh?
It already confirmed. The last hour was engulfing.
Oh no, I'm saying the swing low, that swing high. You need this next candle to confirm that, which it look like it's gonna do. This low need to be the high need to be lower than that swing high.
But I mean, it already confirmed for an entry at 164.45.
Yeah. That just would be another one. That's all. I'm saying that's my entry. I would wait. But
Uh,
yours already say enter.
yeah.
Take it. Take it. Remember, shit, take it.
I hop in. I see that clean tracker to the left and go take that bitch all the way down to like
At least to that swing low point right there.
the 360. That's gonna be my take profit right there. Nice and simple.
Mm-hmm.
See if it work out.
Then you should put your stop right above that swing high, huh?
Mm-hmm.
No, but see, I can't take that call no more. I can't take that stop. So that's why I wouldn't take it, because my rule said I gotta have a X amount. Well, I gotta go super heavy.
I got you.
Well, no, not so. It gotta be 1 day ATR. That's just how I'm getting. That's how I'm living. Because too many of them positions now, I'm like, let me just see if it's gonna work. It'd be high risk to reward, but that shit'll get stopped out, and it'd be quick too. I'd be like, damn, why did I even do that? Like that was too tight in the grand scheme of things. But you on the 4 hour, so oh no, that was the hour.
Yeah, it
Yeah,
was. Well, I was looking at that range, that 4 hour range that it could possibly engulf.
I don't like that.
I just
That's too tight for me. Like I like to get in lower than that on that sell. I like this candle to confirm. Then I get in on the sell for sure. But being that it's so close to that swing high still, that stop is tight. But if it's gonna let you know you're wrong sooner, so
back.
that's good. That's what I like about those. I'm right or I'm wrong.
Yep.
You know,
The
but
I'm right for a whole lot of upside, but I'm wrong right quick. I like
right,
the setup
yeah,
like
high risk to reward. Yeah, I just won't get in that perfect area to where it's like, yeah, I just want that to be a top or a bottom. Like if that was a top, then I'm getting in.
like if it was up here,
Yeah, at the top of that range, where you at top of that range, I'm getting like that other one. Go over to the left,
up here.
right there. Yeah, that's the one I'm getting in. But I was gonna wait until that go over one candle. What? Which one was the swing high? The one before the entry, right?
Well, right here.
No, go back to the one you was at. No. The big candle to
This
the
one
right. Yeah.
to the right.
The swing high is before it, or is that candle?
This is
Like
a.
that high. The green one. Zoom in a little. That kind of in the way.
Hold on, let me take a shot.
No, I liked it in range, but yeah.
Talking about this?
Yeah. It pretty much wherever the swing high at, I can't because the live and the time is in the way. Right is in the center of the video. Pull your screen down, like drag it down. The whole charts.
Oh, like that?
Yeah, right. All right. So it looked like the green one was the high. So green 1, 2. I would have entered the third, the second one after your entry. That's where I would have entered my sell. That red candle, the second one. Yeah, that would have been a confirmation of that swing high, along with the bearish engulfing, and is at the top of a range. That's what I want. Being that one is at the bottom, kind of trying to go back to that range, I don't like it as much.
Yeah.
But it's definitely good to have that type stop in that situation.
Because it possibly could come high and bounce off of this.
Right.
That support term resistance.
Right. You see what I'm saying? So, and that's why I'm only entering with one ATR stop. Like, if I want to be wrong. Like, I'm tired of the mini wrongs, you know what I'm saying? That add up. Like, you shouldn't have to pay for being a mini wrong. Like, you was right in the long term, but in the short term, you was wrong. So you got to pay? No. I want, if I'm paying money in the form of a stop loss, that bitch need to be a whole day ATR against me, and that's just how I'm coming. You know, like, or it need to be fucking. Nah, that's the only rule that I could stick with that just makes sense. I was gonna say make it a bigger lot size, but that's why I'll be fucking up. Don't increase your lot size, decrease it.
Increase your account size.
Exactly. Exactly. That's the only way. That's the only way, bro. It is, and that's the most simple but most important thing to me in risk management. Like, people trying to increase their lot size without increasing it. Don't ever increase your lot size. Increase your account size. And then you increase your lot size percentage wise, it's automatically you got more to that 1, 2, 3, 4, 5% is more now.
Yeah.
You know. Don't try to risk 10%, bro, because you're trying to go bigger and make the money quicker. No, that shit usually don't work. That shit usually don't work. That don't work. From every time I increase my lot size, that shit. But I know it's because of psychology, though. It's my own personal, flaw. That's because I ain't, trained myself to. Because I know it's stupid. I'm like, damn well, you can't afford to be playing with this lot size. So hurry up and get your ass out of there. Take that loss and get the fuck. But when it's on a loss, though, you think you're doing the right thing by staying in a trade. You feel like it's honorable. And you feel like I'm sticking to my guns. And no, stupid. It's showing you that shit ain't working. Get out of there. Look for the next setup. You should never be in drawdown. So when you get in drawdown, as soon as you go even, you got to get out of there. Don't think, oh, I went to drawdown and now things are great now. No.
For my profit.
Because what happens is if you in drawdown, let's say on a buy, what happens is they got a demand zone higher than your buy. I mean, somebody, you see what I'm saying? Like, you buying, so you're looking for a market to come up, but it didn't go up. Oh, yeah, it's a supply zone below your entry, below your buy. So
Right.
people are selling right below your buy. You see what I'm saying? That's why market never come up because it's coming close and they're bound. You know how it come back to zero from a drawdown, then it go right back into the negative before it really go in positive. You know what I'm saying? Like if you down 100 units, then it go down just 10 units. Then that shit go back down 30, 40, 50, 60 units. You be like, damn, I was almost at break even. What that is like I said, basically the opposite was happening right above or below your entry. If you was buying, you had supply, you had sellers coming in heavy below your entry.
Right.
You see what I'm saying? Basically, you was buying at a top. You just, so the sellers coming in. So as soon as it get back to your price, that bitch shoot back against you in sales.
I try my hardest not to do that shit no more.
It's hard to tell, but yeah, sometimes. But yeah, it's best to look at the high time frames in that one. You see the real tops. That's why I'm like monthly and weekly swing lows. That's what my stop's at. So whether it's 1,000 pips or 100, that's the areas I'm. That's where you got to get me out at. You ain't about to get me on no 4-hour intraday shit. Like nigga, this gonna be the high of the year that took me out. That bitch got to hit this high of the year on my sell. You know what I'm saying?
Right.
Like actually show me that you trying to buy for real. If I'm short, nah, bitch, I'm putting my stop loss at the high of the year, somewhere around there. One of these. I'm not putting it at this high from yesterday.
Right.
Like so that's my thing. Like if I'm get stopped out and be wrong, I want to be wrong, not just wrong. Like because most of the time we're really not wrong. Our stop just was too tight.
You had to give him more time to play out to see if you really, really wrong. Because
right.
How really, really wrong do you want to be, and how long away is that really, really wrong from your entry?
All that is all gonna be based off your unit size. That's where the psychology come in. Because like right now, let's see. I'm down 15 pips on euro dollar. But it's just 500 units. That's 75 cents. I'm not worried about that.
Right.
But if that was dollar, that's $15. Or if it was $10, that's $150. So now I'm like, oh, let me put my stop loss at the day's high.
Yeah.
You see?
Yeah.
That's the only thing that makes you feel like that is your unit size, which is was direct relation to your leverage size, your account size.
Right.
So when your pips is 1% of your fucking account, that's scary.
Nah, facts.
Like 10 pips should be 1%. Something like that. Not 1 pip.
Yeah,
Should be 1%.
Leverage at that point.
So it's like, and overlap. I mean, everybody hate that word, right? Nobody want to. Oh, I could over leverage. I could do it. Everybody hate that word, but it's true. It's just true. Like the truth is, what over leverage mean, nigga, this gonna hurt you mentally when you take this loss. That's what that means.
Yep. Shit, before you even take the loss, and you sweat.
Right. Right.
The loss ain't came yet, but it's looking more apparent than it ever did. So you nervous and shit.
Mm-hmm.
Yeah, man. We're gonna probably wrap this bitch up. We'll be back on this whole Tuesday morning.
Yes, sir.
We did go over these markets and shit. We got a lot of heavy news too.
Yeah.
So it's gonna be fun. CPI and a whole lot of shit going on.
Yep. Let's see what it do.
We
got another great one.
We'll be back on this whole Tuesday morning, 7:30.
Money.
Everybody, peace. Money.
Money.
Money.